Guys, good morning, welcome to another live session of Stock Sniper Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Trading with a perfect broker is the key, which takes you one step ahead. At AAAFx, we have you covered. The future of Forex is zero commission. Here at AAAFx, we offer ultra low commission, which starts at 99 cents per lot. Our account's spreads start from 0.0 pips. With account leverage up to 500x, and can have a minimum deposit of $100, with an additional 100% deposit bonus, regulated by HCMC Greece, compliant with ESMA, EU, regulated with FSCA, South Africa. Nothing to lose, but something to gain. Trade with the world's most liquid market provider, AFX, recommended by Stocksnipertrading. To get started, use the affiliate link below.
As a trader, we all look for tight or low spreads, which helps us to get in and out of the market. Using the right broker can help us try different strategies. With multiple options of brokers on the web, here at Stocksnipertrading, we have a recommended broker, that is, HankoTrade. With spreads as low as 0 pips and leverage up to 500x, HankoTrade is just one click away. With multiple account types to choose from, you also have a minimum deposit of $10. Using HankoTrade's affiliate program, refer a friend and earn up to a 40% commission on trading volume. Built by traders, for traders. HankoTrade.
Recording in progress.
Hey guys, good morning, welcome. Thank you for joining Stock Sniper Trading. My name is Ron, my partner is Dave, guys. Welcome. It is 7:30 a.m. Eastern. It is Thursday, September 21. Thank you everyone for joining. We do appreciate you. I hope you guys are having a great day. London had a lot of news, so if you were trading through London, there was a lot of red folders. We'll go over all of that. And so thanks guys for joining. First things first, welcome Mo, welcome Kosova, welcome Ben. Thanks guys for joining. Efren, thank you bro. Thank you for joining. Appreciate you guys. And everyone on YouTube, thank you guys for joining as well. We do appreciate you guys too. Iliud, thank you. CryptoFox and Mafuz, thank you guys. Okay guys, so I hope everyone traded FOMC yesterday with proper risk management. Whether you took a trade or not, I hope you reviewed how it went. The markets sold off yesterday after Powell took the podium. Gold sold off. The markets sold off, so it wasn't that bad of an FOMC, but you just gotta always trade with proper risk management, whatever you're doing. Even today we gotta trade with proper risk management. That's the name of the game. If you can do that, you can lead to be a successful trader. But if you're one of those traders that gambles and wants to get rich quick, it's going to be a tough journey for you as a trader. It's not easy to do that consistently daily. So just trade within your own risk. You know your own risk. I don't know your risk, but you'll know your own risk. Okay, so with that being said, let's take a look at the news today. Okay, so we were talking about a lot of the London news, pre-London over here. We had Swiss franc monetary policy over here on the Swiss franc. We had British news coming over here. So here we see something different we haven't seen in a long time. So their official bank rate in UK, they previous were 5.25, and they were forecasting 5.5%, an increase. Look at what we actually have over here. So it's red because they didn't increase, they kept it the same. So they kept it they're following what Canada and US are doing right now. Okay, so that could have impacted the pound if you were trading with this red folder news over here. And so London, if you were trading through London and going into pre-New York 7 a.m. when they released all this information, it did affect the pound if you are trading it. So just be careful too, because there could be a reaction going into New York with that. What do we have coming up for us? So we've got this one we need to focus on every Thursday, guys. This is weekly. We have our USD unemployment claims. Traditionally every single Thursday at 8:30 it comes out week over week, and then we have our Philly Fed manufacturing index coming out as well. And then when we go into 10 a.m., what do we have? If you're doing anything with the euro, okay, ECB, President Lagarde is speaking, consumer confidence. If you're trading the euro, anything to do with anything that has European currency, be careful here at 10 o'clock. And then throughout the rest of the day this afternoon, we don't have much. If you're trading later this evening, in the Asian session, you have some Bank of Japan, some monetary policy statements. It's always tentative. They don't tell you what time they release their information. I don't know why, but that's how it's always been. So just be careful if you're trading in the Asian session. You do have red folders for JPY coming out. Okay, so that's today, and then tomorrow we'll talk about tomorrow when we get there. Let's go back to the charts. Okay, so what we're going to do today, we're going to do something different. We spoke about this on our FOMC call yesterday. What I'm going to do is, instead of like flip-flopping charts, we're going to do top-down analysis on US 30, NASDAQ, and gold, and keep it like this, where we have 3 charts. And we're going to use Bookmap, where obviously Bookmap we can only look at one security at a time, but we'll start off with whatever analysis I'm doing, the top-down analysis, I will put it to the corresponding Bookmap security over here. Okay, so yeah, Elliot, you had a good FOMC. Good. Alessio, yeah, it just there's a description for the SST kill shot. Just send anything regarding to it there, and it will get to you. Okay. I'll go over that later on. We'll show a little bit of the quick video and things like that. We got some new fun things happening at SST, and things are going to get exciting very, very soon. Okay, so let's get started with gold, guys. We're going to get started with gold. Okay, so let's all put our gold thinking caps on now. Let's all get our minds thinking about gold. Okay, I know a lot of you guys are gold diggers in this group, and we love it. Okay. This is the 5 minutes, okay? Big like head and shoulder pattern. Like if you just look at the overall pattern, left shoulder, the big breakout was 9:30 yesterday. So now reviewing, like just looking what they did. Wall Street, they pumped up the market going into all the way leading into, when was FOMC? 2 o'clock. Like you can see what they did. They pumped it all the way up 12-1. There's 2 o'clock. They brought it down. Brought it right back up. Powell coming to the podium, then they really dumped it leading into the end, and we consolidated in the Asian session, dropped even further, took out these lows. We took out the lows, came back up to retrace, back up to right in this area, and continue to drop down, take out the previous low right there, new low, pull back again, and continue to drop, and now it could be pulling back. And we're going to see today, is gold going to continue to come maybe back up to 1925, 1928, maybe 1930, or are they going to continue to, with pullbacks, continue dumping this thing down? Okay, so let's start off with the daily. And I'm going to go a little faster, guys, because I want to get the 3 top downs done before COMEX market. So it's 7:37 right now. I'm going to go a little bit faster. I'm not going to do like a detailed top down like I normally do, because I want to get all 3 charts done for us, and we can watch all 3 charts leading into COMEX and Wall Street. Okay, so we do have gold. This is daily now, so this is daily analysis. Each one of these individual candles is daily. So we had a big drop right over here. It held mid-August, continued to come back up where they pinned it down at 1950 here in the early September. It continued to push right back down where we bottomed out right here mid-September, Thursday, September 14, where we came down. We hit 1900. We continue to have this uptrend, this weekly uptrend, where it came all the way back up, tested almost 1950 right over here Wednesday this week. Okay, FOMC came up there. Did it take out these highs? No, it didn't. So they shut it down right there at 1947, continued to push it down to 1928, close right here. Today's daily candle, look at it on gold, okay? So you got to learn your wicks, guys. You have to, okay? If you're learning price action, ask yourself, how are you doing with understanding what are wicks, okay? It's very, very important, guys. Okay, are you guys getting better at understanding wicks on candlesticks and what they mean? Not just rejection, but like how it could continue with the momentum of the size of maybe the rejection and things like that. It does tell you a lot. So make sure if you're not sure about like understanding wicks and where they get rejected and things like that, that's something that we need to focus on, and that's something that we need to improve, because once you understand the wicks and get a little bit better understanding, it will help you take your trading to the next level when you start to add some more confluences and things like that. But just looking at all the wicks in this area, in this block of 1950, we got rejected 1, 2, 3, 4 times, and then they pushed it down. We came up with lots of momentum again right into FOMC. It was bullish all day, and then right there they pinned it. They shut it down. 1947 is lower than these wicks, so it wasn't by chance that they just shut it down there. That happened for a reason, and they really brought it down where it closed near the low. This is a bearish pin bar candle, and then look at the continuation today on gold. It opened green, it came up. Did it remember what I was saying in that FOMC, guys, yesterday? The size of the wick determines like the firecracker and things like that. So this has a long way. It's got a lot of momentum. A lot of buyers have to come all the way back up to 1947 in order to pop it and take out this high. So it's a lot of work. It got exhausted. So we came up today, and look at it, just very short day. It came up and rejected right away. Right away they rejected it and pushed it down. And we have a shorter wick on the bottom compared to the size of the wick on the top. So you see how it came down, and we took out yesterday's low, 1927. So right there I'm going to place a yellow line because that is a critical area in the market. And we continue to push down and take out this critical area right here where we've got these daily bodies. Right there, we took out 1923, and it continued to push down into this big bullish candle right here. That's where we found our low of the day, and now it's finding a little bit of a bottom. But this could come back up, touch this yellow line, and go back down. It could continue to come back up, maybe touch this yellow line, go back down today. It could continue to come back up, and all of a sudden maybe this candle can flip bullish, and all of a sudden we're going tomorrow and maybe next week, and we're filling up the FOMC wick, and gold is bullish. But right now we're down here. What I also like to do is I judge where 50% of the volume is from open to where we are right now. Half of the volume is inside this yellow zone, like right here. So I draw like a red box going across just to give me a heads up where 50% is. If it comes back up, I'd like to see maybe continue trending down. And also I want to locate 50% of this big bullish candle on Friday of last week, where it opened and it closed 50%, because we might come down and test 50%. Where would it 50% probably be? Maybe you might find a good location here too. Here's a body, and the wick held this yellow line, and then the yellow line is roughly not exactly half of the candle, so that's why I use a box. I go like a little bit above, a little bit below, and then I bring the box across, and I just color coordinate it green to show that there still maybe could be demand coming from below here where this whole move started. So if we come down today on gold to maybe 1915, 1916, maybe it catches a wick down there, maybe rotates back up. If it comes down with more momentum and we lose this, then it has a high probability it might engulf the entire rest of the candle, coming down to maybe here. Okay, so and what do we have? Look at our move. Now when you're using patterns and things like that, this looks like a big double top M with a big massive wick rejection right there, where the market came up, one leg up, got rejected 4 times at 1950 block in here. Then we headed down and it got stopped right there. That was where we have a bullish pin bar candle coming right off of exactly 1900 psychological block right there. And we came up for the next leg up all the way right back up to here, almost a double top in that similar area up there, and then we're coming right back down. So now we might test 50% of this big candle. It might come into here, hold, and then we retrace back up. But then I use this red box that maybe where they're lowering the supply, and then if it gets rejected there, we might come back down to break this and test 1900 down in here, and maybe that previous low right there, 1885. Maybe gold holds, who knows? Maybe it's coming back up like this, and then we close, and then all of a sudden it's filling these wicks and it's shooting back up here. But I take trading one candle, whether it's a daily candle, then what I do is I dissect the daily candle into hourly, and I dissect the hourly into minutes, and that's how I trade. But if you're a swing trader, if you're an intraday trader, you need to follow your higher time frames, and you have to follow what's going on, how they're shaping up, because it does tell you a lot. Okay, so it's safe to say that today is a big bearish daily candle. I'm sure we can all agree on that. But maybe Wall Street might change the momentum a little bit and come back up. Maybe it might just continue being bearish today with small pullbacks and continuing to sell. Okay, so you have to be careful. Let's break this daily candle now down into the hourly. I got to go a little bit faster because it's 7:45. Okay, so now the hourly candles we all know. Okay, so now when you look at it, this was yesterday Wall Street, 9, 10, there's 11 a.m., 12, noon, there's 1 o'clock, there's our little evening star, and then FOMC, big bearish candle closing below all this structure. Then the next like 30 minutes, Powell, 3 o'clock, 2, power hour, continue to push down. So we had gold yesterday was basically a pump and dump from Wall Street when Powell started, and it dumped all the way right back down. And look at, we were all the way right back down here, continue to push down, pull right back up. There's one of those candles, rejection candle, wick rejected at about 50% of that body, rejected, close below. We're going into London now, and then 4 a.m. they continue to push it down. Here's our little pullback, 5, 6 a.m. back into the red box, and now 7 a.m. we have another big hourly bearish candle pushing right back down. That's what's created our low of the day right there. Okay, so we will see now if we come back up, is gold going to break above this red box, 1925, 1926? Can it come back up here, or are we going to continue to push down? Okay, so we do have a very bearish hourly candle. Looking to the left of the chart, this area right over here. Okay, so I'm going to draw a white line over here. White line. White line is for hourly. Okay, see here where this red candles came down and held right here, green, and then went right back up. Again, we came down red, wick, almost near the white line, go back up. Today, we just broke that white line. We came down, that's what created a low of the day. That's what I'm following to see where this hourly candle will close in the next 12 minutes. Is it going to close above or below the white line? Because that might dictate where it's going to move the next hour. So that is a critical hourly support level in the market. Okay, so we'll continue to watch that. We are hourly making lower lows, lower highs, lower lows, lower high, lower lows, but we can maybe flip come the next hour or go into Wall Street and COMEX. Let's go to the 5 minutes now and break this down a little further. Okay, 5 minutes. Okay, so 5-minute candles are also bearish. Lower lows, lower highs. Okay, so see where it's consolidating now? That hourly white line, the 5 minutes, and the low of the day. Right there. If I trap that, I'm looking for volume to close above here, the white line, hourly resistance. Can we get maybe some closure above here, maybe a possible retest, and maybe we're going to shoot up to that next daily, maybe up to the red box. That's one, but it could also be a fake out up here where fakes out and then comes back down and trades into the box. If we trade back in the box and then we maybe break our low of the day down here, it could be a quick little liquidity grab quickly where it comes down and goes back up. But if we come down and then comes back up and we start to get more supply coming in here at the low of the day, then they could push it, continue to push down, and gold will still be selling off today. Okay, so we're in this little consolidated range. It came down, it's coming back up, might come back down, might go back up, might form a double bottom down in here. If it does break the purple line, look to the left of the chart. Where could we possibly go? Right here. See the structure that's being built on the 5 minutes right over here in the past? Right over here. This used to be support right here before that big red drop, and this used to be resistance right here before that big pump. So if we break from the daily low, maybe right here there's liquidity waiting to be gobbled up right at that red line from the purple line. If I'm just measuring from there to there, it's approximately 17.5 pips to the red line. If that doesn't hold, you're looking for about 20 to 30 down to the green box if we continue pushing down. Right now, if you draw like a trend line from up here, you can see that we are still technically bearish. Okay, this will have to be, if we can break this trend line, close with volume above here and break this, then we might have a bullish breakout of gold right over there. Okay, so right now it came right up to that hourly resistance and continued to push down, still bearish. If you're buying, you're counter trading, this was a nice buy, but you have to understand that you might have to get out because still trending down. Let's add some EMAs. Okay, 9 EMA, we're right at the 9 EMA. 200, where's our 200? All the way up here. So we're below the 200. It's still bearish. If you look at your RSI indicator, okay, yes, it's right at 30. There was a drop right here and a lower low, so it is dropping, and you can see strength is dropped down here, and it's actually a higher low. So there is bullish divergence, what it's showing us on RSI, but do you see any bullish momentum? I don't yet. Okay, so it could be a false signal. You can use like divergence to help you, but we also need other confluences. We need volume, bullish volume to close up here. We need to maybe break this trend line and start up there. But it is developing, but we might need more momentum. We might need more volume. We might need a COMEX market open. We might need Wall Street. And it's something to push this up. But right now, this is the channel we're in right now. Okay, so I'm going to leave these two. Sorry, I'm going to put gold. Let me give you guys the chart first in Zoom, and we're going to continue moving on to US 30 and NASDAQ, and we'll get all of these done. Okay, Zoom, there's a trading view link in the Zoom chat, and that's gold chart if you guys want it. Okay, and let's continue moving. Okay, so I'm going to leave gold. Gold will be over here, far right. Okay, this is gold. Now I'm going to go over here US 30 because it's 7:51. I want to get US 30 and NASDAQ done before 8:15 so we can get ready for COMEX with all three charts and walk into Wall Street with all three charts. Okay, so gold, guys, this is how it looks on Bookmap. Okay, well, I'll revisit this. Okay, it's on 15-minute time slices, 7, 7:15, 7:30, 7:45. We're coming up to 8 o'clock. We're below the VWAP. Cumulative volume delta is -43, so you can see all the transactions, net transactions are still leaning towards sell side right now. I'm going to move over while I'm doing US 30. I want you guys to also look and get familiar with the US 30 book, the order flow. Okay, so YM, this is the futures ticker of Dow. Okay, so again, I'm going to bring it into 15-minute time slices. Here's 7, 7:15, 7:30, 7:45. 8 o'clock is coming up. We do have some heat building above and below us. We're currently almost right at the VWAP. We're right below it. Look at here. Cumulative volume delta on Dow Jones is positive 355. So you can see it's building a little bit of momentum here. So let's take a look, guys, at how US 30 is trading, and we're going to do a top down. Okay, so there is good buying accumulation right now. We're above the balance, but it's kind of this leg coming up. We still have a lot of work to do to break above this resistance, 34,282 today. It could be forming maybe like a inverted head and shoulder pattern right now, where this is our left shoulder. It came down, pick up the liquidity, coming back up. Maybe if we get inside this block again right there, then maybe we'll have the push out with more momentum with news or at a certain market open. If not, it might just be pullbacks and continuing to drop, but we do see accumulation on the buyers right now. But this could be they're absorbing, and they're not going to release this until they absorb enough volume. Okay, but overall, Dow is bearish, higher time frame. Like, look at where it's coming down from, all the way from FOMC, coming all the way down, pull back here, continuing to drop. So we got to close. Buyers need to close above critical levels in order to continue to maybe reverse this and push this up. But right now, still bearish. Okay, so I'm going to start off with the daily. Okay, look at the daily, guys. Okay, so again, following what's going on, guys. Price action can tell you the story. You can put it together. Okay, we were coming down. We came down, back up, lower highs, like up here. This area that used to be demand right here turned into supply right here. Look at all those rejection wicks at 35,000 area. Big red box. Okay, we came in there, rejected. We came down, higher low from over here. So we're coming up with more momentum, and big, huge bullish day on Thursday came into here, and we couldn't break out of here. The next day, look at how they shut it down. Okay, learn your candlesticks now. Okay, it came up, and look at big bearish engulfing candle, almost engulfed the entire previous day. Then we had a spin top to start this week. Monday, pause, indecision, and then Tuesday, they dropped it. They came all the way back down to here, previous kind of low right here, tweezer bottom, came back up, closed here. Then yesterday, they look at how they bait us in, guys. Okay, now does it make sense now when I'm telling you about this? They pushed it bullish from London, Wall Street, all the way up till 2 p.m. Eastern, and when Powell spoke, or the FOMC, then they baited us in. You know, they get you to buy, thinking it's going to break out, and then they reject it hard, and they bring it all the way down. Look how they closed Dow. It's a shooting star candle closing right down at the low with, look at the size of the wick yesterday. Is there even a wick on the bottom of that candle? I can barely see it. Okay, so you know when there's a longer wick, this is a short one. Here's your firecracker. They open it. Was there any momentum today to go up? No. So they shut it down. There's barely any wick. That's our high of the day. There's our wick right there. 34,450, purple line. You know, normally we see a wick come up a little bit, then go down. We barely have any top wick. We barely have any low wick yesterday. So it's easy for the market to come down, take out yesterday's low, and start filling the previous day's wick. We started to fill. Okay, so I'm going to put a yellow line at this critical area because it might come and play in effect today. 34,300, that is acting resistance, critical area, and we're continuing to push down. We're at our low of the day. Like, even if I draw a purple line right here, we're right at our low of the day. It's right there. It could. So now let's look. If it continues to push down today, where could we go? Here's two bodies right here, August 24 and August 25. There was a little bit of a gap in the market, but even if I put a yellow line right there, I'm still hitting both of them. That's one target. Then when we did break down, it came up. Break down, came back up. So let's look now to the left. Now we have, look over here. Look at what I'm looking at. Tuesday, July 11. Big bullish candle, start this huge run, and look at the yellow line. It's directly 50% from open, close, right in the middle. This is where I learned how to read like 50%, because price action does not lie. It tells you everything. So if I draw a green box, you know how I say a little bit above, a little bit below that yellow line, and bring it across. Maybe this is going to be my big green zone going forward. So you see how the red candle today is coming down. We will see what will happen in this big box if it gets there. But I'm making it green. Why green? Because it's above 50% right here. When we did come into it, it got saved here. That's what started that big long bullish run right there. And again, we're coming right back down into it. We'll see if it catches a wick here, maybe has a little bit of a bounce in this green box. If it can't hold this green box, then unfortunately we're going to dump, and it's going to take out this low right here, 34,022, and that's our psychological 34,000 level right there. And if we continue to push down, we've got to do some analysis over here back in July 10 and July 11, previous price action below here. Okay, when we came down here, that was that double bottom that started the big move at the neckline when we had that big bullish move mid-July. So see how the markets now are rotating down, big wick, rejection, everything, guys. Like it's like a puzzle. Once you put it together, you're going to start to really understand this stuff. Okay, so what happens if we retrace back up today? We come up. We have to hit this yellow line in order to come back up. So that's one area of resistance. And if I'm just looking at 50% from open where we are right now, where's about 50% of today's red volume? Maybe right there. Okay, I can do it just like that if I want. I can go down to the red line, okay, or to the yellow line, I'm sorry, and just draw like a red box. The red box is just to give me a heads up that we still have bearish volume coming down. So if today's daily candle catches a wick and we come right back up and we trade in the red box, I'm still leaning towards selling the market unless we can close above a critical area up here, okay? So we are pushing down. Let's go to the hourly now and break this down more because it's 8 a.m. Okay, so hourly candles are trading real clean on US 30, guys. Beautiful. Came up here. Okay, guys, know your zones. Please know your zones. Like right here, you can look to the left. Okay, right there, resistance. Right there was resistance. Bring the static zone across. You see how we walked right into it? Right there. There's FOMC. We walked right into it. They took out the highs, took out the liquidity, and then they dumped it. But now it's not to say, oh, Ron, I didn't know it was static. How did you predict that? This is what you have to do. Bring this thing across now in the future. So then there's no ifs, ands, or buts. So at another time, okay, we're nowhere near this red box, but in the future, you have a resting supply in the market. We're down here right now. But what happens next week, next month, if all of a sudden hourly candles are coming right back up to that red box and then they go right back down? Okay, so I'm positioning myself to be ready for that opportunity because I don't want to say, oh, I didn't stretch my red box across and I missed it. No, this is where you have to start to take your top-down analysis very serious because you can set yourself up for future success. If you're lazy on your top-down, you're going to be lazy on your trading. I'm just being honest with everyone. I hope I'm not hurting anyone's feelings, but when you do something in life, if you plan ahead and you plan properly, you're setting yourself up for success. If you're waiting and you're late to the party and you're late and you miss the bus every single day, you're going to miss opportunities. Set yourself up for success. This area should have been marked 100%. You can see, if you look to the left of the chart, you can see how it got rejected right there. You can see when it came up again, it got rejected. Right there, that's enough confirmation to just put a zone across the chart. That's it. You know, and then there's no ifs, ands, or buts. Maybe price action will never get back up here for a while. Who knows? But we have to get ready for it. Even right here, okay, see this zone right here? Okay, so this is this not a support area right there? Support right there, green box. Okay, right? Sorry guys, but this is important to me and important to you guys. See the green box right here? We came down, back up. Came down, yes, impulse break. There's going to be impulse moves in the markets too. That's how they get our money. They get us to they bait us in, we sell, and they go the other way, okay? So the only way to beat that is be patient and disciplined. Wait for your body to close. If it's an hourly candle, 60-minute candle, unfortunately, guys, if that's what you trade, you have to wait 60 minutes. Otherwise, you're taking impulse moves, or you got to break your hourly candle down to 30-minute, 15-minute, and trade a smaller time frame for entries. But if you waited for the hourly candles to close, you would not have got baited in. You would have been buying above here. So it held. Bring this zone across. Right there. Look at all those times. It came down to the green box, back up. Came down, back up. Now, let's bring it in the future. Okay? So there's no ifs, ands, or buts. Okay? Where are we now? Look at that big candle, red candle came down. That's roughly about 50%, but it can't be green anymore. I can't keep this green box because the volume is below us. So I have to flip it red. Okay, so you see, this is kind of like how order flow works. You have resting supply. Here's a bigger resting supply at this big box up here, but then you can see that they're lowering the supply down here. Are we there yet? No. So we still have to possibly get through this red box before we can, and then there's the previous purple line, the high of the day. Then we got to get to that red box before we can get to this red box. So we've got a lot of levels that we have to push through in order to get here and here. This is a bigger red box, okay? So you can see they're dropping supply here, dropping the supply here, dropping the supply here. Even right here, they're dropping the supply, like over here. So let's for hourly now. So this is why I use white lines too. I don't want to have too many red lines on my chart, but here's hourly, 34,400 white line. Okay, you see this little pullback right here came up and 3 rejections and continued to push down. So that's hourly resistance, continue to push down. And we're below here now, okay? So we're down here. I want to see if we can come up, back up and trade into here, okay? Sorry guys, I didn't want to go all into that, but it is important, okay? So I got to continue going. On these hourly, okay? So look at the hourly now. We're at the low of the day, the purple line, okay? Hourly is, if you follow RSI, it's at 24.25. We are oversold. But what happens if they continue to maybe push it down a little bit more to grab some more liquidity below the purple line? Look to the left of the chart. And the last time we traded below the purple line, I can tell you the exact time and date was August 24, August 25 in here. Okay, so there's an impulse break. There's a couple impulse candles that broke below the purple line right here. See where it broke, caught a wick, back up. This candle came down, caught a wick, and back up. Let's place a white line right at those two equal tweezer bottom wicks, right there and right there. Because today, if we have an impulse break of our low of the day, look at where we'll come down to. Maybe the white line, and look at how it's psychologically 34,200 exactly. Nice whole number, beautiful. And then if you guys follow like fair value gaps and things like that, then you use your own fair value gap analysis, and maybe you can find where the fair value gaps are down there, and maybe find better entries. Okay, so that's what I look for on the hourly. If we do break down today, maybe see the purple line. Now I have the white line, 34,200. I can draw like maybe a green box right there, maybe a little bit above, a little bit below. Not a huge green box, but just something to give me a heads up that maybe if things are getting really, really oversold, that might be a good buying opportunity if it bounces off of there later today. I don't know if we'll even get down there today because they've already pinned the low of the day right now. Now coming back up, look how much supply we got to come up to. Like we're fighting this, but now if I really want to trap, okay, let's go through 50% of this candle. Previous candle, 7 a.m. Open, close. What's half of it? Right here. See how I have the two wicks right there and kind of right there? There's my next red zone. Okay, so I will only be looking for or entertaining buys if we can maybe close above this red box today. Because then I want to build off of this. I want to flip this red box green, and maybe we can start to shoot back up here. But you see how it just retested? It came up green, 50% of the previous candle, got a wick, and now we're pushing down and filling the previous wick, might take out the low. So if you're buying, you're getting caught, you know, like you got to know how to pip and dip out of these markets if you are trading like that, okay? So US 30 is still dumping. Let's go to the 5 minutes. Okay, so see how it's still pushing down. See these pullbacks? They're nice, okay, for a scalper. You can scalp this, measure your zone. It came up 30 pips, pip and dip and get your money out of there. Because right now, look how we're consolidating. It's building right now. Okay, in here, this entire zone is consolidating by the low of the day. And it's still maybe possibly pushing down. If you don't feel comfortable trading in this box, don't trade this box. Have we closed with any volume above here? It almost did, but we still haven't got any volume closing above here. If for buys, maybe we see something close above here, and then we can push up. We are still trending down. Like if you draw a trend line, still coming down. Okay, there was a little where it got violated right there and touched. Now you see how they bring it all the way down. Taken out, new low of the day, maybe grab some liquidity. Look at the book map, how it's coming down. So remember all of that. We were positive 400 on cumulative volume delta. Now we're back to positive 100, maybe back down to balance. So it's easy for a seller to just redistribute because there's a lot of selling pressure in the market. Look at all the offers above us. Okay, so let's just add a few EMAs because I gotta finish up NASDAQ in 7 minutes. Okay, right here quickly. Our 9 EMA green, 200 is up here. Okay, what is going on the 5 minutes? There is bullish divergence. Okay, it keeps making new lower lows while the strength is increasing, but I don't want to get bit. I want to look for volume to close above the red box in order to look for buys. Okay, so that is US 30, guys. We will keep US 30 right over here. Sorry, let me give you guys the chart one moment. And I want to get NASDAQ done fast so we can get ready for COMEX. Okay, there's another link in the Zoom. That's US 30, guys. Okay, so here is US 30. We'll keep it right over here to the left. We got gold. See gold continuing to drop down, guys. Okay, so trade with the moment. It might come down into the green box, and we might get a good push out of the green box. Look at the RSI on gold. Oh my goodness. Sorry guys, I have another monitor in my 15. It's down to 15. Okay, so if you get caught buying, you're going to get screwed. Okay, so wait for it to come to a critical demand area on the higher time frame. What we did with our top down. Maybe this area, 1917, maybe 1916 and a half, maybe 1915 could be a good area to maybe position a buy. Okay, maybe. And US 30 is still pushing down. Now I'm going to do NASDAQ because it's 8:10. I want to get this done in 7 minutes. Gives us 3 minutes to breathe before COMEX. Okay, I'm going to go a little bit faster, guys. Okay, so this is NASDAQ now. This is tech related. Tech is dropping too. Entire markets are dropping. So very similar setup to US 30 where we came up, double bottom. That big bearish engulfing candle on Friday closed below everything. We had a bear flag, sideways consolidation right here, green, red, and then yesterday FOMC really push it down. Look at the wicks, guys. Do we have any wicks? These are blocks. These are beautiful. If you really appreciate price action, these are amazing candles. Look at, there's no wick to the bottom. Look at today, we opened ignited. They gapped it up to try and get it up there, and it pushed down, broke. Easy sell. Easy sell, guys. You could have put an alert right there any time frame. If you're a 4-hour trader, hourly trader, 30-minute trader, 15-minute trader, 5-minute trader, 1-minute trader, that was a great execution to take there. Have confidence in your trading, guys. Don't be scared to do what you do. You know, if the setups are there, just don't over leverage. Take the trade and learn. And once you start to learn how to trade, then you'll get more comfortable with what lot size to use and things like that. Okay, so look at our high and low of the day. It's a Maribuzo candle. There's no wick above, there's no wick below. We're just dropping right now. Okay, so we have to go through the motions. Again, 50%. Where's 50% of today's NASDAQ volume? Just easy, eyeball, cut in half, right there. Okay, right there. That's approximate. I'm just looking at it. I'm not measuring anything. I'm just looking right there. Half. Okay. So what do? A red box, a little bit above and below today, and bring it across. So there's no ifs, ands, or buts. If it comes back up next week, set yourself up right now. Okay. So if it ever does pull back to 14,880, maybe we continue push down. If we get volume closing above, then we might have momentum to continue to engulf the rest of the red body and start to drive up here. And then look at the FOMC. 50%, there's the wick, there's these critical bodies right there too. You see how everything lines up properly? Right there. There's a body, that wick, that's roughly half of previous volume, guys. 50% rule. If you learn that, you're on your way to be a successful trader. Just learning 50% rule. It's very, very easy. Very, very easy. Really help you understand price action. So today, if we continue to push down, where could we go? Let's target this wick right here. Okay, this wick, the top of here. That's Friday, August 18. 14,745, 750. We'll target maybe down here today. And then where's our next time? Down here, I want to draw a green box, okay? Because here is where the market held. Okay, you can see. Let's draw a big green box right there. That's our monthly demand area. Okay, why? Because We broke right here, but it came right back up and it closed as a pin bar. And look at the retest the next day, Monday, following, and then bullish move. And then we came down red, right down, right into that green box, cut our wick, and continue to move up. And look at now, we're coming right back down. We're going to see now if we fill this wick. Maybe if it holds in here. If it doesn't, then we're dropping. It's going to be an impulse breakdown, maybe to target 14,550. This, but there's going to be price action in between. If I look to the left, look, bring this green box right there. You see how it came right into the green box there now? So this is after the fact. Some traders say, Ron, well, this was after this, but look at what I'm doing. I'm now setting my charts up for the future, so there's no ifs, ands, or buts. So someone can't say, oh, well, Ron, you just look to the left. No, we look to the left to get our information, but we stretch our static zones across. So now if it comes down in the green box and it bounces, I don't want to be the guy to say, oh, I told you so. No, we got to do this from now. Okay, position yourself up for success. Now you see impulse. If we impulse, big wick, knowing your wick analysis, maybe we can't fill that entire wick, but it will come down a little bit. Where will it come down to? Do I not see 1, 2, 3 wicks right there? 14,600. My eyes see that. I smoked a big joint this morning and my eyes see this right here. Okay, that should be another. You should have a line right there. So if we come down, maybe it comes down, it fills the wick, but it doesn't fill all the way because there's a higher low waiting here and there's a big block of bids waiting to pick up at 15,600, and then they reverse it back up and it's still holding the uptrend. Okay, so guys, pay attention to these things. Okay, the more you know about this, the better you will be as a trader. So we have a big bearish day coming down following yesterday's big heavy selling. So there could be small pullbacks but continued dumping today. So if you're trading against the trend, we can clearly see it's a selling day, unless there is something that changes in New York and we close above some critical areas. Guys, sorry, 8:15. I gotta get this done. Hourlies, we're pushing down. Okay, so if you were buying, you're in big trouble. There's not much to buy. Okay, it's continuing to drop down. Okay, so we are still, if you just draw a trend line from London, we are pushing down still. It's very clear we're still pushing down. Now what I do is, okay, 50% of my 7 a.m. candle, where is it? Let's draw a white hourly line right at half of it, right there. Okay, so I want to see, can the buyers close it above 50% here, break the trend line, and maybe we pop out of there bullish today. But if we also break below the purple line coming down here, look to the left of the chart, now we have hourly analysis. Okay, remember that big yellow line I did for the daily, but now here's hourly impulse moves. If it comes down there, right there, that wick, 14,770. I have a white line right there. Okay, so that's where we could possibly push down to. Okay, so we have now some targets, hourly resistance, hourly support, daily, big block here, maybe for buying opportunity if it does come down there at some point. But right now we got to focus on what's going on here. 5 minutes on NASDAQ. Okay, again, if you want to trap it, we're right at the low of the day. You can trap it from that white line, that hourly. And if you don't feel comfortable trading this zone, don't trade this zone. Watch and see who accumulates more. Let's see, maybe buys above here. If we can break the trend line, it builds. If not, you could continue to sell, but sells could just come down right quickly right down here. That could be maybe 20 pip move. You got to measure it. That's why I measure the moves. And so right now it's continuing to push down. Our green 9 EMA and our 200 is up here. Guys, I'll share you guys this chart, and we're going to put all three together, and we're going to move over because we're 3 minutes away from COMEX market open. Guys, I'll get better with my timing. Okay, this is the first time I did 3 charts before COMEX, but I know my speed, so I know what I'll have to do and how much I have to talk, guys. Okay, so there is another link in the Zoom chat for you guys. Now we've got all 3 together. Okay, so you choose what security you want to trade. Some of you guys like US 30, great. Some of you guys like NASDAQ, fantastic. Others that love gold, gold is there for you. Okay, the only thing I'm going to do is I'm going to change the book map to what we're looking at. So right now we're going to watch COMEX, so we're going to focus on gold right now. Okay, So gold, again, how's gold books look? We got 7:30, 15-minute time slices, 7:45, 8 a.m., 8:15. We're going to go into 8:30. See over here, we have a big block of bids waiting down here on gold in our big green zone, 1916. We have a big block of bids. Okay, so let's put the pieces of the puzzle together. But we have this negative volume, negative 400. So we can clearly see gold is still dumping. Okay, but now you see how it's coming into the big green box. 1 minute before comex. Look it. Let's see. They're right into that big order. Watch, guys. Watch. Okay. Let's see if they pick it up. If it gets pulled, it could drop even further. Okay. So see how it's dropping. Okay. We came right into here now. I don't even want to look at the RSI. What is it at? It's down to 10. Okay. 5-minute RSI is down to 10. But don't just take trades just because you're looking at RSI. Okay, let's see. And we're going to have COMEX market open, okay? Let's get ready, guys, okay? Could be fast, could trade right into that block. Ton of bids waiting in there, 113, 36, 47, but it's a big red needle coming down. Quentin, do you need Bookmap to trade or does it make it easier? You do not need Bookmap to trade. I never used to trade with Bookmap. It does help, okay? You see now how we can see the big block. We can visually see it, okay? So it does help with trading, but you do not need it, no. Okay, here we go. So this is COMEX market open. Look how they brought it strategically right down into where the liquidity is sitting. We have a bullish candle coming up. Maybe I want to see if it can close above here, okay? Otherwise, it's just maybe you're doing a quick scalp, but it could just come back up and then they bring it right back down because they want to grab more bids in there. Okay, check your spreads too. Okay, I got 0.8 on gold right now. Less than 1 pip. That's not bad spread. Okay, so what are thoughts on gold, guys? What are your thoughts? Yep, big news in 10 minutes too. Yeah, thank you, iPhone. Guys, we have the unemployment claims coming in 10 minutes coming too. Okay, so just remember, okay, this is COMEX market open, and then in 10 minutes we have that USD red folder on the unemployment claims, so weekly unemployment. Look at the block now building. Okay, so we're building really, really nice right now. Okay, but knowing the markets, they could bait us in and then continue to drop it down a little bit more for max pain. You know, max pain. Like if you're going to start a buy, okay, if you're going to start a position, what I recommend is start small position. Like if we're going to get our feet wet, let's get our feet wet. We don't need to just jump right into the deep end. Just if you think you want to buy now, just take a small buy, because if they want to max pain you and bring it down for another 10, 15, 20 pips, if you go in with, like, let's say a standard lot size, you're down $100, $200, $300, that's max pain. You're probably going to tap out and you're going to have a shitty day. But if you go in with $1 a pip and you go down 10, 15, 20, we're down $10. We're down 15 bucks. Some traders can live with that, but it's more for analysis of the market as opposed to just going all in right away. That's what I notice. A lot of traders are just going all in with one size, big size, and then they're not really understanding what's going on in the market, and then they get taken for max pain. You know, you got to be able to manipulate your trading just like the market makers do. Same thing. I call them the 3M. The 3M. There's a corporation called 3M. I call the market makers. I call them the 3Ms. They're the market makers. They're the market manipulators. And there's one more. The market mafia. Is that what it is, Lee? Yeah, maybe market mafia. Market movers. You got it. That's the three. It's market makers, market movers, market manipulators. Okay, so we're coming up right now. I'm going to test a buy. Okay, guys, I'm going to go in for a buy at this demand zone, at this block in Bookmap. Yes, it could come back down to pick up more liquidity, but I'm going to test this out. So I'm going to go in a buy right now in this zone. Test out a gold buy in here above the yellow line here, and I want to see if maybe it has enough, can come up to maybe test the trend line up here, maybe start to engulf this candle right up here. Yes, it could form a double bottom too, guys. Okay, that's why I'm going in a smaller size first one, because I know it can come down, I know it can come back up too, but I also know it could come right back down to pick up any leftover volume in there if it wants to. So I'm going in with a buy, but again, it's just a first buy, testing out the zone in here, and to see if it can continue maybe to build and come right through here. Okay, but this is, I'm in a buy here. 0.2% of my account, I'm in here. Okay, so right in that block, we're coming right back up, but it could very well hit this block and come right back down. But that's why we want to see if the depth of market is going to start to build in here. And also, guys, I'm taking a trade right before news too, so that's why also I'm going in small, because I know in 5 minutes we're going to have the unemployment claims and it could come down red again. So that's why I'm going in small, to test out COMEX market open, also to test out the news that's coming in the market. Okay, so look at where they closed it. They closed it 50% of the previous red candle. Now let's go through our price action. Okay, do we have a bullish ignited candle with a short wick and a pop? Yes, we do. Okay, so let's see if it has enough momentum to maybe come up and have momentum to maybe engulf this previous red candle. Okay, we might get pulled down, but we want to see if it can pick up the bids. Okay, and this move is 15 pips from the yellow daily line, that critical line. Okay, so what I'm trying to see is maybe can it come up to the 9 EMA, maybe up to that previous red line for 25 pips to maybe engulf. Okay, and I know some of you guys don't trade like with small, you guys go all in, that's your business, but if you're up 15 pips and you want to go to a break even, you can do that to reduce your risk as well. Okay, because I'm just telling you, in about 3 minutes, we're going into news. Okay, so see how we're building? So do you guys just rewind. Now rewind. See what they did? They brought it all the way right back into the big block there on Bookmap. But when we did our top-down analysis, we had our own green block here. So someone asked me, Ron, do we need Bookmap to trade? No, you don't. You need a nice simple top-down analysis, what we just did, and we figure out where the blocks are in the market. But this can give us confluence and confidence to take the trade. Okay, so we came up. We're going to encounter resistance. Okay, this is a pullback. It's not a reversal. It's a pullback still. So it comes up and it might get pushed back down. Okay, because you're going to encounter some offers. There's been, if you guys remember, the gold has been selling all day today. Dow has been selling. NASDAQ's been selling. The markets are selling off. So for us to buy, we're countering the big move. So I don't know if you guys are scalping. I don't know if some of you guys are intraday traders. I don't know if some of you guys are buying 1915 and looking to hold gold till the end of the day. I have no idea. But you need to decide what type of trader you are and what you want out of these markets. I know what type of trader I am and what I look for out of trading. Dave is on holidays this week, if I understand what you're saying. E-Ray, you got a friendly Canadian twang, but with due respect, what the F is Dave? I have no idea what you're talking about, but if you're saying where is Dave, he's on holidays this week. He'll be back Monday. Sorry, maybe I just didn't understand what you're saying. Big Dave will be back. Don't worry, guys. He's out golfing right now. Okay, guys, nice big bullish candle. Okay, coming up. Okay, that's 20 pips, guys. Okay, just to I want to mention, okay, because I know there is some traders in the group that scalp. Okay, that's 20 pips with no drawdown. Go to a break even. Go to a break even or scale out. Do what you got to do. Okay, because I know there's scalpers in the group too here. Okay, but you guys know why, like, we're looking for that trade. Okay, the pieces of the puzzle added up. The trade came to us. We never chased this trade. It came to us. That's what trading should be, guys. Let it come to you naturally and don't chase. 20 pips, Rafi. Good job, bro. Okay, but go to a break even. Okay, and that now takes emotions out of the trade. You have zero risk in the trade. It makes trading easier. Okay, yes, you might have a couple break evens in your trading day, but break evens are okay. You're not losing any money. Okay, because you never know with news. Right now, here we go. Watch, guys. Here's our news. They could do a nasty candle and come down, or we could open bullish and with the news and pump out of here. Here we go. Okay, look at it. Okay, see how it's coming down? The wick. I can see it already on Bookmap. See, look at it. That's nasty, guys. That's manipulation. You see that? How they bring it down? Watch. It's probably going to catch a wick and come right back up. Look at where it tested. The yellow line exactly. It's nasty, guys. So that's why sometimes I like using Bookmap. You can see ahead before even TradingView or probably your broker even makes a move. So this is live liquidity, guys. Yep, beautiful. Okay, we got a wick right there. Let's see if we can flip this candle. It's still building, but it might come down and hit break even. But this is news, guys, so that's why I give you a heads up. If you're trading in news, anything can happen. That's why sometimes maybe secure 20 pips right before you have major announcement in the market. Okay, but you see why, you know, Quentin, now when you ask me, Ron, is Bookmap beneficial? Hell yeah, it's beneficial. Did you see how you could see it coming down before the candle even closed? So that gives you an opportunity to close the trade in profit. Okay, guys, unfortunately, if right there, if you have a break even, your break even got triggered. If you have a stop loss below the zone, you might be still live, but we came right back down into that block again. But the block is not there. It's below here now, okay? And then look at the markets here too. So Dow, if you got caught in a buy, news comes back down. Look at Dow right into our green box right here now. Okay, and also NASDAQ. I don't personally trade NASDAQ, guys, as much as I used to. I trade more gold and US 30. But US 30 perfectly came down right into the green box. Let's see if it can catch a wick, maybe reverse out of here. Lee, that's absolutely correct. Trading should be boring if you're doing it correct. 100% agree with that. 100% agree. John Wick, I don't check news. I don't really care for news because I know that news is manipulated, numbers are manipulated. I'm a price action trader. I trade what I see. I don't trade news because news is all bullshit. Okay, they're lying about the CPI data all the time. They don't include oil and energy and housing, but they're trying to say that inflation is going down when when oil and energy is going through the roof and housing is going through the roof, but they're not gonna. But then they're gonna tell you that inflation is in control. It's all bullshit, guys. It's all smoke and mirrors. I don't really look at the numbers. I don't care for the numbers. I react on price action. I'll look at the numbers after I'm done trading. After I make some money, I'll look at the numbers. I'm supply demand trader. Yeah, whatever you want to call it, guys. I don't know the names. Okay, yes, I trade supply and demand. I trade top-down analysis. I'm a scalper. I trade price action. I trade whatever you guys want to call it. I don't know all the terms and the names of what we call each other, okay? I'm a trader. I'm a scalper. I trade what I see with my eyes. Smoke a joint and trade. That's what I do. Yeah, very simply, I do to make money. Whatever way I got to get in these markets and make my money, that's what I got to do. Whatever you guys want to call it, whether it's smart money concept, it's all of these different names. I don't really care. I'm not a person that gives a shit about what the name, what it's called. Okay, I'm trying to teach you how to trade. Whatever you want to call it, you call it. Focus on price action, guys, not the names of what these different strategies are called. That's where I find everyone's getting confused. What did we call it last time? CSC concepts. Common sense concepts. Common sense. Use your common sense in the markets. That's the best strategy you can use. It's free. It doesn't cost you anything to use your common sense in the markets. Okay, guys. So like here, gold, okay, came down, came back up for 20 pips. Hopefully, maybe some of you guys maybe pipped and dipped. I don't know what your style is, but I dipped out of there. Coming back down. Okay, is this going to be an official double bottom? Okay, we're coming down. Is it going to build and continue to come up? And then what we're watching for is continuation. Sorry, let me just get rid of this green box so you guys can see. Above here. So if I'm drawing one more zone above here, I'm looking for the next move on gold later today. I don't know when, but above here. Okay, so I'm going to do a red box so everybody can see. Place an alert up here if you guys want on your charts up here above 1919. If gold can get back up there, maybe it needs to come back down and pick up more liquidity, but if it comes back up here eventually, then maybe this might be another good buying opportunity above 1920 up here. Okay, and then the RSI divergence, how is it working out? It's not really working out right now. Okay, so you can't go too much with divergence. Okay, because what they'll do is then they'll continue to drop it and pick up the liquidity. Okay, so yes, I think they're going to break the low and continue to drop it down. Where could it come down to? Gold. Let's see, I have nothing to look at below here on the 5 minutes because we have not been down here in a long time. I have to go to a higher time frame to see where it could possibly go down to. So what we can do is full chart gold, okay, right here. Let's go to 15-minute below the green box. Okay, now we see something. Last time 15-minute volume was down here, where did we come down to? Right there. Look at all those wicks. 1914.665 right there. Okay, so I'm going to place a line right there. See what I'm doing? I'm targeting those wicks right there, targeting those wicks right there, targeting these wicks right there that held the market up, and maybe it might hold. If we don't, there's our other zone right down in here. See right here? Okay, so right there, that's like another zone at 1913. Okay, so that zone. I'll draw one more white line right there, just in case they come down to pick up that liquidity down there. And when I go to the 5 minutes, there it is. Okay, so there's our first white line, that 15-minute. So have we touched it? No. And then our next one will be right there. So they are slowly maybe grabbing the liquidity down in here. Okay, see all it's waiting. There's a lot of bids waiting to get picked up here. So the market's job is to come down there and pick up those bids. So let's see if it continues to push down. Okay. And then now for another buy, I'll look for another buy maybe above this zone. Okay, and also with NASDAQ, big breakout candle on news. Okay, this only happened on news, 8:30. We had our news in the market. Okay, so maybe it was intentional on news. They take the market down, could be picking up. We'll see if they pick up for Wall Street and come back up. Or today, is it just going to be a selling day? Pullbacks, short pullbacks, continue to sell, short pullbacks, continue to sell. It might be one of those days. But now what I do is, if I'm not in Dow right now, so I lower the consolidated box now below the purple line and at this green box, and maybe if I'm looking to entertain a buy, maybe if something closes above 34 to 33 up here, because then it might have momentum to come up to that red box. And then I measure everything, okay? So like with gold, measure your moves. With right there, that's about 25 to possibly 30 pips for US 30. If it can close above the purple line, retest maybe and come back up, you can get yourself maybe 15, 20, 30 pips up to there. Same with gold. Measured it right up to the top. Was I had the ruler showing you 15, 20 pips. If you're a scalper, which is what I am, okay, you probably won't see me holding trades forever. I scalp, so I'm in trades for maybe 1 5-minute candle, maybe 2 5-minute candles, unless it's going to continue to move with the momentum. Yes, I'm going to try and stay in it, but for the most part, a lot of my trades are 10, 15, 20 pips, guys. Just real talk. You're not going to see me holding for a 100 pip move unless there's something crazy going on in the market. I like in and out. I scalp like legs in the markets. Like if I'm buying, I'm just counter buying, get 10, 15, 20 pips, get out. And then if it comes back down, maybe you can possibly sell with the market, or you're waiting for your next buy. I'm seeing if it's going to accumulate here. Some of you guys maybe were holding and had your stop or your break even get hit, or maybe your stop loss. I don't know, but guys, you need to figure this out, okay? I don't want you guys trading the way how I trade. I want you guys trading the way how you guys trade. You got to trade what your comfort is, okay? I had too many losses by holding trades and trying to get more than 30, 40, 50 pips as a scalper. That was my problem when I was learning how to trade and scalp. I was holding scalps where I'd get in nice trades. I'd go up 20, 30, and I'd hold for try and get 50, 70, and all of a sudden it would always come back down and hit my break even. And then I'm like, I gotta change this. I'm looking at my results at the end of the day and I'm making no money, but I'm getting in good trades. So then I just figured out, okay, maybe I'm a trader that needs to go in for 10, 15, 20, get my money and not worry about what happens after the fact. Okay, so here's now our divergence building. We're building a nice bullish engulfing candle. Let's see if we can come right back up again, guys. Leg trader, you like that one? Okay, yeah, leg trader concepts. That's a new strategy, trading legs. Okay. Okay, so gold is building, guys. It's building, okay? This area is very, like, look at all the heat coming in. Okay, we've got a ton of heat in here. But the thing that's interesting is this negative 600 CVD. Okay, there is a lot of bids in the market for gold, but every time gold comes up, it's getting absorbed by a lot of supply orders. Like, it's unbelievable. Like, look at it. It came up green again, and it punching it right back down. Okay, US 30 is still in this box, and NASDAQ is down here now. Okay, so I'm just telling you guys personally, I don't trade NASDAQ as much as I should. I'm more of a Dow US 30 trader. I don't know why, but it is what it is. Okay, so Dow is pushing back up too. Okay, so it hit that green. Okay, this is why this style is good for if you're a scalper. Okay, so I'm talking to the scalpers in the group. See when it came down, and then it came to that hourly white line in our green box. Okay, so if you just hit the buy as a scalper in here, where things are getting really oversold at a critical area in the market. You've located the demand. If you had a buy, you put your stop loss maybe 10 pips below here. Then what happens? Okay, so the size of the wick when it comes up and closes, you're up 20 pips, and then the next candle open with a short pullback and continue to drive, and you're up 40 pips. So just as a scalper, even just getting in on that wick, some of us trade wicks. Some wicks are 10, 20 pips. You could just, as it comes down, but it's got to be at a zone. It's got to be at a critical area. You can't just buy any candle you want. It's got to be these ones where it's maybe, look at the divergence forming on RSI. Okay, so they brought it down on news for a specific reason, to pick up the liquidity as the strength was building, and then now we're coming right through here. Okay, is gold doing the same thing? No, gold is trying. There's bullish divergence on gold, but gold has a lot of offers, a lot of supply continuing to push the market down. This is why I love US 30. Okay, so because a move like this can net you 40 pips in a couple minutes, and this is gold now coming right back up. They rejected it hard, and it's a bearish shooting star candle coming right back down. Let's see. Remember that white line? That was that 15-minute line back where we went. Let's see if it holds. And in our levels for gold today, 1912, okay, 1912 and 1910 is our other critical daily area here. Okay, and then we'll be looking at indices as well, going more into 9 a.m. Okay, so this was something different I did today for everybody. Okay, because I have no idea what everybody's trading. Okay, maybe one day we can replace NASDAQ and we'll put maybe a currency pair in here. We'll do something different. We'll also, believe it or not, guys, we'll add S&P in here. Okay, we'll add S&P. Sergio liquidity program. This is called Bookmap. Bookmap, live liquidity platform. Subscribe to Rhythmic data. What you can do, guys, is if you want, there's a link we have in our description. You can download it, Bookmap, for free, but you can only chart and analyze BTC, Bitcoin. But if you want to practice, okay, because maybe live liquidity is new to you, but if you want to practice for free and you don't want to pay for the Rhythmic data to see all the other securities, practice for free, guys. It gives you Bitcoin, crypto. You can watch it. Same thing. It's got offers. Bitcoin has offers. It's got bids. It's got volume profile. You can learn what this cumulative volume delta indicator is and things like that. Ivy, how do I tell where the critical daily points are? Doing the top-down analysis. Finding the critical daily bodies and wicks. I did it, Ivy, on all three charts right before we started this call. If you want to kind of maybe watch it after, I go through in detail exactly where I figure out where we do it every single day, not just today. It's every day we start trading, Ivy. I do it with a top down, bro, and we figure out where the areas are to the best of our ability, and then that's what we trade throughout the day. So every single day when we do start trading, we always start with a top down. Shouldn't take you too long. Like, some of you guys are getting really good in the group. You guys can do your top downs in 5 minutes or less. You guys are bang, bang, bang. You guys know exactly what you're looking for. But when you're taking your time to do a thorough one, maybe invest 10 minutes. 10 minutes in before you even start trading, guys. It will help you out a lot. Believe me. Then you won't be guessing where these zones are. You'll know. Price action doesn't lie. It tells you the story. Alan, how are you, bro? It's been a long time. I hope you're doing well. Okay, guys, so maybe we gotta wait till 9 o'clock for maybe an hourly change up. Okay, gold is still pushing down. Okay, so this zone, I'm gonna have to flip it. If we start closing below here, this zone, I can keep it neutral because I believe we're gonna come back and maybe trade in here. So we'll keep it neutral. We'll get rid of this consolidated zone. We're not here anymore. Get rid of this. Okay, So for buys, we got to wait for volume to pick up on buyers on gold. They are, but look at the see this negative 850 CVD. It's a lot of selling pressure pushing down today. A lot of selling pressure pushing down. Okay, NASDAQ is still in this box, and US 30 is still in the box. If you want to trade in the box, you're welcome to, but understand that it could get really choppy inside here. It's consolidating right before 9 o'clock. We could get our bullish breakout. We could be looking for buys above there, but I'm looking for volume to close above here as well. Efren, take care. Enjoy your day today. Thanks for joining. Okay, now gold is getting a little bit of momentum. Okay, did any volume close below here? No. So every time it came down, came back up with a wick. Came down, came up with a wick. Came down, came up with a wick. That white line, okay, remember we went in the past and looked at that 15-minute structure. So it's still holding good here. Okay, so gold is now coming back up. Let's see gold if it can close above this critical area. Here I'm looking for 1917.50. Okay, we're coming right back up. Let's see if we can kind of get close to the VWAP and build something here. NASDAQ pullback, very nice, coming right back up as a pin bar, maybe hammer candle. We'll see how it closes in the next 30 seconds. And also US 30 is building as well. Okay, so now momentum is coming right back up. Now we're having a impulse breakout on US 30, on NASDAQ. Gold is getting up to the previous high. I'd like to see if gold can close above here, and then maybe we'll start to really push. Okay, so here's the close in 5 seconds, guys. Again, impulse, closing back below here. Impulse, closing back below. So they closed it in the box. Okay, so if you're a patient, disciplined trader, did any volume close above there? No, we haven't had that yet on the 5 minutes. What is my daily goal, Thanos? Daily goal in pips or money? Not money, but my daily goal is 0.5%, 1% on my account, or 50 to 100 pips a day. That's enough to keep the doctor away. And then the money is depending on whatever capital you're trading with. Some trader might trade with $1,000. Some trader trades with $100,000. Some traders trade with $1 million. You can determine how much you want to make in the markets. You are your own boss. But what I strive for is 0.5%, 1% per day, or 50 to 100 pips a day. Those are like my goals. Okay, so you see, guys, next, did anything close above here? Positive? No. So it's red again, okay? The overall momentum of the market is selling right now, okay? So buyers are trying. They're trying with that leg up, but again, it's coming right back down. Gold buyers are trying, but again, it's coming right back down. So it still needs to accumulate, still needs to build. We might have to go into 9 a.m. on the new hourly candle and see what that brings. But right now, guys, it's pretty choppy, okay? The only trade I took was that quick scalp right there. But I'm waiting now for 9 a.m. to see how these markets will move at 9 a.m. Okay, and then if it still wants to trade in here, then let it trade in here. Gold, they're really dumping it, guys. Okay, so then don't get caught counter buying if they're going to continue some. But with this divergence, you have to be careful, because at 9 a.m. this is when they could break it out. Okay, so if you're not in a trade, remain patient. That's all I'm saying. Okay, yeah, Sherry, you're absolutely correct. The market is accumulating, getting ready for Wall Street. Okay, and in Wall Street there might be nice moves. Wall Street could be maybe possibly choppy as well. But maybe after Wall Street we might get some really nice volume to trade. So don't risk everything right now, guys, because there might be some really nice trading right after Wall Street. And if you risk everything right now, you might not have anything to trade after. Okay. Thulani, you feel happy when your analysis is same as mine and you need to work on it? You're probably, your analysis is better than mine. Just all, like you said, you got to work on entries. That's for everybody. That's including myself too. Okay, so nobody is above and beyond these markets. We all need to humble ourselves down, and we all need to always work on our entries and exits. Okay, you have to. As a trader, don't feel like if you're trading for 5 years, 10 years, and you think you got this, one day you can do a big mistake and can wipe you out. I've been there, and these markets have humbled me down, in life, in everything. So just this goes for everybody, including myself. We all need to work on our entries and exits. Okay, have to. Okay, don't think what works today is going to work tomorrow. That's not how the markets work. Okay, we just have to get to know what we're doing and be confident with what we're doing. But that comes with risk management too, where you're not risking a lot. So if you do make a mistake, it's not the end of the world. That's what I'm noticing with a lot of traders. I don't know if it was because of the prop firms and things like that, where really where they were trying over leveraging too much because it was a prop firm and they weren't maybe trading their own real money. Because when you trade your own real money, you're going to want to learn how to trade properly, because you're not going to over leverage your own money, because that could be your paycheck that you could be going to work all week, and you put that money in the markets. You worked your ass off for that. You're probably working 8-10 hour days at work, and then just to throw it in the market and gamble, I don't think you're going to do that. So I think some traders learned a lot of bad habits with prop firms, and but we gotta be better than that, guys. Okay. Okay, so NASDAQ is still building. Let's look at the wicks now. Okay, so we've got a lot of wicks accumulating from the bottom. What is that telling us? It's telling us every time the market comes down, it's going back up. That's telling us it's accumulating bids. Buyers are buying it right back up, but we need to close with positive momentum. If there's buyers interested, then prove to me that you can close it above here. Same with US 30. Look at all these 4 impulse wicks breaking out of here. Okay, yes, we might get an impulse breakout, but we're 5 minutes away from 9 a.m. So same thing could happen, just like gold, where gold broke out, then we had like 8:30 come in and drop. Same thing. US 30 could break out and drop at 9. So I'm going to patiently wait for 9 a.m. to see where this can close in the next 4 minutes, and maybe look for maybe a potential move on US 30. See if gold can continue to build, but still bearish. Yes, thank you, Chris. Guys, if you can hit the like button, almost 400 of us on YouTube. Thank you. We do appreciate it. It keeps the channel moving, keeps the channel growing, keeps us motivated to come on YouTube, to tell you the truth too. Dave and I don't need to come on YouTube, but we do want to give back. We've been doing it for 3.5 years now. We started in April of 2020, was our first ever stream, and we've been doing it every single day, guys. We give back to you guys on the YouTube community for free every single day. Same knowledge we give in the Zoom, we give to you guys on YouTube. Same thing. We're the same people. We don't change who we are. Okay, we're the same as we are in Zoom with you guys. But just please, guys, if you can hit the like button, that's all we ask for in return. It helps grow the channel. We want to reach lots of people that need a financial education around the world, guys. It's up to you to help too, not just us. You know, if you guys have the same mission and vision as us, you guys can help us. We want to give back to people that deserve a financial education for free in poor countries that need this. You know, some of you guys are living in really difficult situations, countries around the world where your inflation is not even close to what our inflation is here in North America. But we love to give back, guys. Okay, so here we go. Let's get ready for 9 a.m. That's the impulse breakout. Okay, some of you guys are buying Dow down here, and I know who you guys are. You guys are messaging me. So good job on that. But again, it could just be an impulse, and then look how it's coming down. Okay, and we still have 2.5 minutes. Let's see where this body is going to close. NASDAQ broke out and coming right back down. Have we closed with anything above here? Not yet. Gold is just being gold. Okay, so gold is still accumulating down here. Gold could just pop out of anywhere. But let's wait for 9 a.m. guys to see what the markets give us at 9. Okay, like these candles, these indecision candles on NASDAQ, they're not the best to trade. There's no direction right now. At least we're getting a little movement on Dow. Gold is still building down in here. Still that bullish divergence. Gold could come up. But it looks like we're filling the imbalance right up there. So remember we measured this from here to here. Okay, that's approximately 20 pips. If it comes up to the red box, 25, maybe 30 up there. Okay, so we're 1 minute and 20 seconds away from 9 a.m. And let's see what we get here. This is why personally I love trading the Dow. Like I'm telling you the honest truth. Kind of like a little pop of a wick and you're up 20 pips with minimal drawdown. In and out. That's like, as a scalper, that's scalper's paradise. Okay. I personally treat US 30 like it's my personal ATM machine in my home. I love this thing. I could trade this thing all day, every day, any session. I don't care. I don't need to look at anything else. This thing is a cash cow. If you're a scalper, that's just trading it for over years, guys. I fell in love with it. I love this thing. Look at that body. It's beautiful. Okay, and then look at what we got with NASDAQ and gold. I'm not going to say that it's always, because some days US 30 has the good, the bad, and the ugly days. You got to take it what it gives you, okay? But that's a nice, if you're in that, guys, make a decision, okay? It came right up to the zone. You're approximately up, I don't know where you bought in, but anywhere from 10, 20 to 30 to 40 pips. Make a decision, because now in 2 seconds we have 9 a.m. New hourly candle. Let's see what happens. Okay, so it closed above. Ignited candle. Go through the motions. Let me just get rid of these alerts, guys. Flip the red box green. Let's do this. Let's do it together. Flip red box green. It's an ignited bar. There it goes. No wick. Pop. Okay, so you get yourself an additional few pips. Look at now to the left, the resistance right here. 280. The previous resistance right over here. Can it fill up to there? 283. Touch that red line. And then we have that high wick right there at 7 a.m. when they rejected it. Now we're filling the imbalance. There goes Dow. Beautiful, guys. Okay. 50 pips. Okay, from right here. Wow. You could be done for the day. You know when I said 50 pips is my daily target? Right there. You could be done for the day. You wait for it to accumulate down here. You set your zones up. And then you start to see it's building with the wicks. Remember what I said at the beginning of the call? Learn the wicks. Okay, learn what they are. I think we need to have a webinar coming up on wick analysis, a refresher. We got to go over these wicks again. I need to know that you guys understand these wicks. Okay, now, okay, NASDAQ is moving, okay, pushing up. Gold is coming right back up. Bullish engulfing candle. Get ready for gold to maybe pop out of here and close above. Abdi, welcome, bro. From all the way from Morocco. Welcome. Thank you for joining, bro. Okay, guys. So see what we did there. Everything we talk about, okay? Where did it close? It closed near the high. How did it open? It opened with a bullish ignited candle. Is there any wick on our previous bar? No. Why? Because demand is high. And we flip the red zone green, it turns into an area of bids, and we're driving right up exactly to the red line, which was our previous 3 wick highs right there. Okay, and we just kissed it. Can it pop a little more and fill up to that wick? It could possibly come up to 290, but that's a target, that red line. That's how I trade. I trade like a sniper. I make my targets. When it gets there, I execute, and I don't worry what happens after the fact. If you're still in the trade, then yes, it could possibly come up to that next high wick. Our job is to see if it will fill prior wicks and pop. Overnight shorts covering, probably. Who knows what's going on, but could be covering right before Wall Street. Okay, so they're bringing it up before Wall Street. Maybe Wall Street will come right back down, come tumbling down. Okay, so this could be just a retracement back up to this next critical daily yellow line, 34,300 up here. Gold is pushing back up again. Okay, so we had bullish divergence on everything, on all of our three charts right now. If you want to go over what bullish divergence is, it's when the price action is making lower lows and our RSI indicator or any indicator that's oscillating is making higher lows. Is it an accurate strategy to just trade if you see bullish divergence? And no, it's not. Okay, but you have to use also levels and things like that. Okay. And what we're also looking for is closure, okay? Not just an impulse, okay? It's nice that we impulsively broke above here, but can the volume close above this critical area so that it can continue to build? Okay, let's look at YM's book. Let's look at the Dow's book. See what's going on over here because we're coming to some interesting areas. Okay, so Dow built off the bottom here at 830, 845. You see sellers are trying to sell down in here, but they're not getting any bites. The bids want to come up here, so therefore the price is going to continue to move higher. We got up to the VWAP right before 9 a.m. and that's when we popped above the VWAP, came up. It might come back down to retest, but you see the VWAP now has some big heat right here, so there's a lot of bids, 33 and 58 bids at the VWAP. Our cumulative volume delta, positive 300. That's what that accumulation Sherry was talking about. Let it accumulate, and all of the accumulation, when we look at now total transactions, we're leaning towards net buying, okay, as opposed to where gold was net negative sales, okay, and then that's that nice push coming right through there. Okay, NASDAQ broke out to the purple line and coming right back down. Okay, with US 30, we came up to that previous high, coming right back down. Where will it close? It's going to close now in 5 seconds. It's an inverted hammer right now. Okay, so we had it where there is still a little bullish volume, but we have an upper wick that got rejected, so it might have a high probability to come back down and test the green box here. We might see the Dow come back down to test the VWAP right here. Payment, okay, that's what I was going to ask, guys. Do you guys like the three charts? This is how I kind of, I prefer trading this way, because then I can talk about gold, I can talk about NASDAQ, I can answer questions about US 30, I can talk about Bookmap. It's not, I don't have to flip-flop from TradingView to different charts and things like that. If you guys are okay with this on YouTube and Zoom, I'd like to continue this, guys. Yes, we can replace the charts with different securities, absolutely, but maybe we'll have a poll every single day, like if we replace one of these, one day maybe it's not gold, maybe one day it's US oil, maybe instead of NASDAQ we look at S&P. But with me, guys, I'm always going to be doing Dow. Okay, so with me, you know, you got Dow locked in. Okay, so the other two is what we decide, whether it's going to be gold or US oil, whether it's going to be NASDAQ or it's going to be S&P, we can we can choose with these ones. But with me, I'm always trading myself personally US 30. So with me, you always will have US 30 on the first chart. These two other ones, we can have a poll, we can talk together as a team, and we'll decide what we get. But is it okay for your eyes, guys? I know it's busy, but it's the best I can do because we have Bookmap. If we weren't using Bookmap, I could have gone to a full screen, 3 charts, opened it up, but we also, Bookmap is very valuable, guys. Okay, good. Guys, I prefer honest feedback. If it's not good, if it's not working, let me know. We'll try and figure something out. But this really works for me, and if it works for you guys, then let's continue doing this. Okay, and then if you guys have questions, like right now, if you guys ask me a question about gold, I'm looking right at it, you know, so I don't have to flip-flop, and I'm still got my eyes on indices. So I can multitask, guys. I'm good at that. I can do those things. If you guys have any questions, you guys shoot your questions. I can help. But look at gold right now. We closed above with volume, and look at now our price action analysis. Is it not a bearish ignited candle coming right back down? So therefore, there was no buy opportunity at the breakout. Did it come down 50%? Did it hold a wick there? No. It's coming all the way right back down where it's engulfing back down to the yellow line. So maybe it needs to come down and pick up more bids in order to come back up. But all day today, gold has been selling. All day yesterday. Okay, so This was a nice little counter trade coming right back up for maybe 20 pips. But if you don't do anything up there, yes, it can come down. Maybe you guys are holding, accumulating. Like look at the retest on US 30 right here. Beautiful. Came down. Remember, this used to be a red box. We just flipped it green. So initially it wicked off. So it is holding it as current support in the market. And we're continuing to maybe drive up to, see, 34,600 in the book on Dow. That's where there's heavy liquidity sitting there. Okay, maybe the market wants to come up and transact into this high level of liquidity, or maybe the market is going to turn back down and touch this liquidity right at the VWAP and get these bids in order to have that momentum going into Wall Street to possibly break out of this resistance. Mohammed, you hit your 2% today. Good job, brother. You're killing it. You got your percent yesterday too, and today, Mohammed, walk out of these markets. 2%. You got your daily goal. Go on with your day now. Yassine, we had an amazing session in FOMC. It was a lot of fun yesterday. It was really fun. It wasn't the craziest, volatile, erratic FOMC ever. It was really nice actually. You know, we took some trades. We waited patiently, but normally FOMCs can be very erratic. Sherry, enjoy your day today. Have a great day. Okay, guys, so NASDAQ, it's building, okay? It's a slow crawler today, but it's building as well. Now our US 30 is kind of consolidating at this red line and above this box. So what I kind of do is, normally, guys, I'm trading one chart, like I'm trading US 30. So I kind of have it on a full chart, but what I'm doing is I'm just moving like my consolidated zone to where the next zone is, where it's consolidating. And if it comes into this zone, I could be patiently waiting for my next trade. I could watch what's going on in here. If it breaks below here, for example, if it comes back down, closes below here, maybe retest this, I flip this. Now it's not support, it's resistance, red, and then pushes back down. Could possibly get into maybe a possible sell opportunity, you know, as a scalper. If you're looking for a longer hold, then 50% of this big candle that started at 855, where is it? Right here. Okay, so we have to hold at least 50% of this momentum in order to maybe keep this uptrend moving. If not, if we lose 50% of this candle, it might come all the way right back down to where it all started. Okay, so we want to see. And there's the 9 EMA. It's right at about 50% of the volume. And you see how we're touching right back down at the VWAP. Okay, so those offers that were up here at 34,600, you see now how the block is being lowered, the block is being lowered, and then it's coming all the way down. Remember, there was a nice big block here at the VWAP. Now you see the bids went lower. Okay, so that might allow it to continue to push down bearish. So the blocks in here tell you a lot as well. And you're going to start to see these things really start to accumulate the closer we get to Wall Street. And then the moves are going to be more erratic. The candle size the range is going to be much bigger. So this is where you got to know too as a trader. If you're trading into news or if you're trading into a specific session every single day, whether it's London, whether it's Wall Street, whether it's the Tokyo Open, whether it's Power Hour, whether it's FOMC, NFP, whatever it is, you got to know that the institutions now will be coming to get a lot of volume. So you and I, as small retail traders, these candles can open up specifically for US 30 could be 30 to 50 pips. So if you're trading with a 10, 15, 20 pip stop loss and you're on the wrong end, I can 99.9% guarantee you're going to get stopped out because you're trading where institutions are coming in and they're moving volume. So if you don't pick the right side and you have a tight stop loss, you're probably going to get taken out. So that's where you might have to open up your stop loss a little bit more, but you have to reduce your lot size in order to respect your risk management. That's the hardest thing that some traders have difficulty doing. They never want to lower their lot size. But if you don't get the trade, it's going to hurt you. It's going to hurt you in a big way. That loss, a big loss, could take away yesterday's gains and the day before. Then you got to go back to the drawing board. And not only did you lose money, you lost time in the markets. It's not easy, guys. But if you have a set plan every single day, you know what you're trading, you know what market you're trading, you know the volatility that comes with it, then you're just setting yourself up for success. Then you know how to trade these markets. And then with practice, every single day, you're going to get better and better and better at your craft. Just like a sports player, you know, they practice. Michael Jordan and Kobe, they didn't become who they are. They were in the gym daily practicing to get what they do in real life situation. Anybody watching Colorado, guys? NCAA football with primetime Deion Sanders. Man, it's exciting what they're doing over there. They play Oregon this weekend. They're 21-point dogs. If they can figure a way to win that game, wow. Prime time for life. I love him. I love him. I love him. How about the Cowboys? Yes, now we're talking. Shadur, yeah, he's going to be hopefully Heisman. Okay, so see what's happening now? Okay, so just building up, and we're coming down. That green box, I'm going to flip it red because we got 30 seconds. I want to see where that body is going to close. Okay, will it close back below there? And are we going to push down? Are we holding about 50%? Okay, we got a wick right at the 90 EMA. Can it come back in this box? And maybe Wall Street, we might have a breakout. Maybe now you can see like the pattern is forming. You can see the pattern right here. Okay, we came up. Okay, we're coming right back down. There's always going to be pullbacks in trading, guys. It's not always going to be green candles going up forever. Okay, there's a pullback. Now we got to see, can we hold 50% here or this area, and can we come back up into here? Right now it's not. So we're retesting the red box, and it's possibly going to maybe drop down even further. So they're just getting this ready for Wall Street. Okay, we just got to figure out what leg we're going to be trading when comes Wall Street. Okay, so we got to go through the motions. Like NASDAQ is doing absolutely nothing right now. Okay, so it's really, there's no volume in NASDAQ. Gold is still in this range. Okay, so you can see it's very choppy. Yeah, there's some small scalps you can take buy, you can take sell, but there's no official move yet. So I think 9:30 we got to wait to Wall Street to see what we're going to do here. Radagon, forget about Colorado. We're losing money. Well, if you're losing money, not sure. You're losing money. I'm not losing money. I took a gold buy and I'm waiting for my next trade. It's okay. I lose money too, but we can still talk sports. It's not the end of the world. You don't got to get angry. You don't got to get upset. If you're getting upset because you're losing, then you need to figure that out. That's what trading is. You're not the only one in here that's lost money trading. We've all lost money trading, okay? So, but you got to figure out what's going on. That's what trading is. Go back today and figure out why you lost money. Make sure you do that, because if you don't do that, then you're not going to know why you lost money. And you're probably going to lose more money tomorrow or the next day. You got to figure out. Okay, so see guys, now another bullish candle. Okay, we're forming our neckline right now. We're forming our neckline. Okay, so we're still holding above 50%. Okay, look for guys unusual size candlesticks. Okay, number one. Okay, do we see anything unusual like with the size of the NASDAQ right now? No, they're all similar, all these indecision candles. This is an unusually large red candle on gold. And so we're still below the yellow line. So now 50% like below there, if we still stay below there, gold could still be bearish. Okay, but every time it's coming down, it's picking up a wick. Coming down, picking. How many wicks has it picked up down here? 1, 2, 3, 4, 5, 6, 7, 8 currently. Okay, so it is building. There is some demand down here for gold, but they're not allowing it to break out. Why? Because there's a big wall up there. There's a supply wall. Not me, not you, but the market makers. They're not allowing gold to break out above 1918 currently. Maybe it needs to develop and get more volume down here, and Wall Street might be able to break it out, guys. But you gotta be patient, allow it to build. Unless you're trading individual candles and you're getting stressed out, that's different. But if you're trading this entire zone, it's still building. You got to know your range too. That's why you use your measuring tool. If you're trading inside here, go from here to there, it's a big zone. It's 40 pips. Okay, so if you're trading with a 10 pip, 20 pip stop loss, you can see just these barcoding candles, green, red, you're getting caught. You're getting upset and you're losing. Okay, sometimes just be on the sidelines, patiently wait for a nice setup. I'm waiting for Wall Street. It's 10 minutes away. Do I want to jump in right now and trade before Wall Street? No, because it's going to get, you'll see, guys. Watch the book on, I can go to NASDAQ, we can go to S&P, we can go to gold, or we can go to Dow. But you will see how crazy it will get. Stephanie, I agree with you perfectly. You lose money with no risk management, you lose money with no proper entry, you lose money with greed, you win money with preparation and continuation. That's all it is, guys. But it takes time. It takes time to put in the work and learn that. There's a lot of traders that just want to make money without learning. Okay, that's how it is. That's how I used to be too. When I started trading, I was only concerned about making money and didn't want to learn, and was just worried about getting rich. And that's when I lost all my money. That was the days get broke real quick. Now I take my trading very serious. Okay, I allocate a certain amount each day, and I'm willing to lose that amount, and I'm okay with it. I can still go on daily with my life. It's not affecting me, but that's what it comes down to. How much? But you got to learn too. Don't learn with money. That's the worst way to learn trading. Forget about the dollar figures. The money will come down the road if you trust the process. Learn how to make a certain daily percent per day or a certain pip goal if you trade Forex. Okay, that's where you got to learn. Give yourself daily targets of either 0.5%, 1% per day, and then depending on how much capital you have, you'll figure out how much 0.5%, 1% can change your life. Okay, guys, so we're about 7.5 minutes away from Wall Street right now. Okay, we're building our neckline on US 30. It came up, back down, neckline. Could come up for a double top and then they bring it right back down. Or we build and maybe it will break out of here. NASDAQ has absolutely no volume right now. Okay, NASDAQ is just dead right now, and gold still building. Okay, so let's see what the markets give us. Let's just go over Forex Factory really quick. Do we have any news? Normally there's some type of news at 9:45. Let's see, 10 o'clock. Okay, so we don't have anything at 9:45. We have 10 o'clock. Okay, if you're trading anything to do with the euro, ECB. Okay, the England Central Bank President Lagarde speaks. And do we have anything in the U.S.? Just some minor, smaller folders, existing home sales. Nothing to really impact us, so it's just going to be a straightforward Wall Street market open. Could be a little bit of liquidity grabbing. There could be a directional move. Let's see what they give us. Gold is coming right back up. Okay, so gold is now double bottoming with some bottom wicks. Okay, so just look at what's going on. If you're not in a trade, just continue to monitor. A lot of wicks down there. What did we count down there? 6 wicks coming back up. Did we close above there? Yes, we did. But did we do anything with it? No. It was a bearish engulfing candle. Come right back down into here, holding. Now we have another big bullish candle coming up. Can this one come up and actually close above there? And maybe we retest. And then with Wall Street volume, we're breaking maybe 1920, that purple line, and then we're shooting up to here. Okay, so gold is building, NASDAQ is building, and US 30 is still hugging the 90 EMA and building at that supporting area right here. Okay, so still building, but we're barcoding red, green, red. So we're 6 minutes away from Wall Street, guys. So just with everything, make sure now you're checking your spreads, you're checking your security. Like for me, for example, I was trading gold. My lot size is completely different when I go over to US 30 with my broker. Okay, so these are adjustments I have to make before I even trade. If I don't, I'll make a big mistake. I could you guys need to do this too. Okay, go through the motions. If you're whatever one you're trading, make sure you look at your spreads. Make sure you have the appropriate lot size you're ready to use for Wall Street. I recommend don't going too big, okay, because there's going to be, with all of the securities, doesn't matter what you're trading, Wall Street brings in a ton of volume. Okay, so just be prepared. Let's see what happens. We're going to go till just after 10 o'clock. We have over 35 more minutes. Almost 440 viewers on YouTube, guys. If you guys can take just 1 second, just hit the like button. If you guys get value at what SST brings you guys, please, guys, we appreciate it. Thank you. Subscribe to the channel. Hit the notifications because sometimes we go live any time of the day. Share the live channels with your trading groups if you guys can. We have other stuff going on here at SST. We got London analysis. We have post Monday, Wednesday, Friday with Sniper PK, Dave, myself. And we have other things coming. We have a lot of education too, guys. If you're looking to learn how to trade, lots of education. We have another weekly webinar today at 5 p.m. Okay, so gold now above here. Is it? Let's see if it can hold. So that red box, flip it green. Can we start to build some momentum off of here with gold? Can it start to hold? It's retesting. We got we got NASDAQ now starting to break out. Okay, so you see the pullback on US 30. Did it touch 50% of that big unusual candle? No, it came close, but 9 EMA hugged it perfectly, and we're coming right back up. So this also teaches you maybe if you go into a trade where to maybe strategically place your stop loss and things like that. See how we came down to the VWAP on Dow, held, continuing to push right back up. Okay, so we're going to see now a few minutes away, 4 minutes away from Wall Street, guys. Lee, yep, I agree with that statement. Your losses in trading are your business costs, rent, supplies, electricity, expenses. Yeah, it's like when you go to school, okay? If you go to school, not only do you pay your tuition, but you got to buy books, you got to pay your rent. If you're on campus, you got to pay your bills, you got to pay your everything. So in order to get an education at university or college, there's still a lot of expenses. So trading has expenses too. Our commissions are expenses. Our spreads are expenses. All of everything we put into this are expenses. Our losses are our expenses as traders. Some of us can keep expenses low because you're not trading too high with big lot sizing. You're still learning. Yes, you do have expenses, but they're manageable expenses. The traders who are blowing up accounts are not managing their expenses. They're reckless. It's like my wife with my credit card. She just just goes out and spends. No, I'm joking. My wife is really, really cheap. Don't tell her I said that, or else you won't see Ronnie streaming. You won't see Ronnie streaming anymore. No, she is very frugal. She's, yeah, economical. That's the words. Sorry, guys. That's it for Ron. You guys won't see me any longer. It was nice knowing you guys. Can I edit something out on YouTube? Or once I say it, it's done. Any video editors out there want a job? Yeah, I gotta be careful what I say. Okay, guys, let's get focused here. 90 seconds. Here we go. Okay, so gold is building. Okay, double bottom. Can you guys see? I know it's an ugly double bottom with all of these wicks, but the wicks are telling us something. They're picking up volume here, coming back up. There's our neckline. Came back down. We're building. Okay, building off this green box. Let's see if gold. Okay, I know a lot of you guys are gold traders. Let's see if we can start to break the trend line and maybe get it up to 1920, breaking out of there. There could be something nasty that happens, like they might pull it down in Wall Street one more time to get all the pending orders, take out the stops, and then they bring it up. Okay, NASDAQ, we're building. Okay, so NASDAQ and US 30, we're building leading into Wall Street. So if you just draw a little trend, okay, on NASDAQ, I know it was ugly, but slowly it's building. Okay, and we're building on US 30. Beautiful. Coming up to maybe this area, 34,600. See how they're pulling the orders right now? Right before Wall Street. Here we go, 40 seconds. Okay, they pulled. Did you guys see quickly? Learn too how they pull the orders. You know, it helps too if you're a scalper, because that when they pull an order, that could be 10, 20 extra pips that you're getting. Beautiful move. Okay, we're punching out of here. Beautiful, guys. Beautiful. Excellent. There we go. All the orders, 600, got pulled right before Wall Street. Now it's going to get volatile, but get ready, guys. Okay, so goodbye accumulation. Right going into market open. Here we go, 10 seconds. So we traded right at that critical yellow daily line. We're shooting up to here. There's our 200 EMA on Dow. NASDAQ is pumping. Gold is probably going to break out as well. Here we go. Here's retest of the yellow line. Holding, holding, holding. Let's see if it can pop and go. Yeah, I'm going to buy. I'm buying. Yep. I'm going to buy this and see if we can continue to push on Dow. Let's see if we can drive with this. Beautiful. Let's see if we can get up to that 630, 640. NASDAQ is pushing really nice too. NASDAQ, guys, okay, don't forget about NASDAQ. NASDAQ is breaking out all of that accumulation. Now it's being redistributed nicely on NASDAQ, touching that hourly white line. Okay, so I got stopped out. But that's initial buy, and I'm going to look to re-enter if it can build, okay? I bought US 30, I got stopped out. I'm going to see if it can continue to build at the VWAP. Okay, I believe it could be coming down to grab the liquidity to come right back up. Sorry guys, I didn't make that clear. Okay, when I'm trading Wall Street, guys, I'm trading US 30. I just said I was buying. I'll make that more clear next time. Okay, gold, nothing closed above, pushing right back down. Nothing closed above on gold. Okay, so we're catching our wick right there at the VWAP, right at those. Let's see if it can come back up. 2.5 more minutes to close. I want to see if it can kind of close above here and continue. I think maybe we could continue bullish today. Okay, I still have a bullish bias coming out of Wall Street. I took a loss, but I can continue to go back in. But I want to see how it reacts down here. If they're coming, they could, like what I was saying. Wall Street opens up. Okay, so you got to
I decreased my lot size, but I'm going to still trade with Wall Street. I'm going to still watch this. It's a little choppy right now. Okay, we're moving sideways. Big green candle, red candle coming down. Let's see what we get with our next bar. I'm sometimes aggressive with Wall Street. If it closes down below here, maybe we might have to look for maybe possible if it sells down into here. If it closes down below here, we still have a minute 50. Okay, so this green box red, just in case any pullbacks, if we stay below this, then we might be continuing to sell down. Okay, so I'm waiting now 90 seconds for the next candle to open. See if it retraces up. Coming right back down to the double bottom, okay? So sometimes the markets do this and I hate it, okay? It's the staircase go up and an elevator coming down. Same with NASDAQ. All of that building could be coming down. Gold building could be coming down. But they could be coming down just to take out all pending orders. Okay, let's see what they do down here. I'm not taking another trade yet until I see what's going on. And see CVD, it's still positive 500. Okay, it's still accumulating. That's why I'm seeing if they're going to pick up everything and bring it right back up, because there is still a lot of interest in the Dow. We'll see. Is it a fake dump? We'll see, guys. We'll see. Let's see. Okay, let's wait for the close. We've got indecision on NASDAQ. Gold is coming right back down. Let's see how what they do down here. Okay, so small wick, open it red, probably take out that wick, take out this low. Let's see if they take out that low. Yep, coming down. Okay, so right here. Remember the previous area where we cut that wick and started this uptrend? That's what we're taking out right now. Let's see if it can hold here. That would be like a official double bottom, equal lows right down in here. Okay, but a lot of selling pressure coming down. It's an ignited bar pushing down, so it's probably going to break and drop a little further. Okay, but the bids are coming right back up. Okay, I'm going to buy this candle now. I'm going to go in and buy on Dow, buying, and I'm going to place my stop. I'm going to increase my stop down to here, okay? Because I want to let this one breathe a little bit, because I might accumulate another position on this one. And then my target will be to come up to maybe up to 50% of that big red candle up there. So I'm going to maybe add another buy if I get an opportunity, and maybe I'm going to try and hold this one going into 945. Also, NASDAQ looks good, guys. NASDAQ and gold. Keep your eyes on gold as well. Okay, up here. Gold, 1918. Above here on gold, 2. Holy, gold is so slow right now, but it's still building. Okay, we held this box right here. Let's see if gold can close above here. The first 5, 10, 15 minutes of Wall Street, it's very manipulated. It moves a lot. That's why I'm lowering my lot size. I'm going a bigger stop than I normally use, but I want to see how this thing will play out. I'm looking to add another position. Okay, so my first one will go and draw down, but that's why it's a smaller size. And then if it comes down in here, and I might be adding another position. but I'm going very, very low risk, guys, very low risk. I would never ever trade with this big of a stop loss with a large lot size. No way. This is a small size, guys. I'm just testing out this zone to see if it can accumulate in here, and then if the buyers can bring it out of here, then I'm going to start to increase size. Okay, so we're still consolidating inside here. Yeah, gold again. So nothing closed above here on gold, rejected. So gold looks like it might be pushing down in here, but every time we come down, there's so many of these wicks down here. You got to get red volume to maybe close below these wicks in order to push it down. Just gold is still in this consolidated box, still ranging. Just keep your eyes on gold above 1918. Okay, so like Dow, it's positive 700 on the cumulative volume delta. So it's showing there's a lot of bid interest, but there's just so much offers coming down that are absorbing all of these buyers. Like myself, I'm a buyer right now, and I'm getting absorbed by all of the selling pressure. That's why I'm in a smaller size, guys. I'm in a smaller size. I'm looking to maybe add another buy if I can. If I start to see some green volume closing like above here, then I might add a position. But I'm starting slow. I'm getting in with smaller positions because if I do get stopped out, I don't want to risk a lot. Okay, I would never ever scalp a move like this. I'm looking to maybe add a position. So I'm starting off with a feeler trade. And if this one I might have to hold for a little bit, I might have to hold it going into 10 a.m. Stop loss is down in here, but I'm looking to kind of add another position. So I'm not really looking for a stop, okay? I'm going to add one more in here. I'm adding another buy, guys, okay? I don't know how to do this with this thing, but I'm adding another buy in here. Okay, this is the second buy. The first one's in drawdown. I don't know how to make it look like that. I'm trying to build with these bids in here. Okay, I know there's a lot of supply coming down. That's why I'm going in small sizing, guys, small sizing. Okay, and then once I can get some good confirmation, if it comes back and closes above here, then I'll be, if I'm in profit on this one, back to break even on this one, and we start to close above, then I'm going to start to add a third. Then that will be more of a standard position up there. I'm kind of feeling out the market, guys. You know what I mean? I'm kind of feeling it out myself. Gold is closing above here. I'm kind of doing it like this, guys. These are institutions, okay? They're feeling out the market too with some. They're absorbing. I'm absorbing too, okay? But I'm not going in with huge sizes that are going to destroy my entire account, okay? Small sizing. Just getting a feel of where the market's going. If it goes against me today, then I close those minimal losses, and then I'll trade down with where they're moving the markets. It's kind of what I've been doing all week. And then figure out the institutional move around 9:45, 10 a.m., and then I trade with it. But I'm speculating. I'm in here speculating a little bit. Wow, gold. Gold keeps coming up to 1918 and drop. So let's see if it can actually get that volume to close above there. Ideally, I want to see if it can get up back up to the VWAP up here, up to here, this area. That's where the support was, and that's where it broke down. I want to see if the buyers can bring it right back up to this level, 34,550, if they can get it back into here. Gold, let's keep an eye on it. 90 more seconds on gold. Let's see if it can close above that 1918. It's not there yet. They keep rejecting it down. Okay, and then now we're getting a new 15-minute candle in 30 seconds. Okay, so a new 15-minute candle brings new momentum in the market. Let's see what type of momentum we get. NASDAQ got rejected at all of these, this hourly white line, 1, 2, 3 times there, coming back down, maybe down to the 9 EMA to build again. Gold, no closure above there. Okay, so far, 15 more seconds. And can US 30 close 50% above that previous red candle to build in the next 15 minutes? Let's see what we get here. Okay, so we got a bullish bar. I want to see if it can kind of close inside in this area. Okay, it's coming back up. That was my first buy. My second buy is down here. But it could very well pull back again, guys. So I'm looking for maybe a double bottom pullback if it does at these bodies. Okay, there we go. Okay, so my second one, now we're on break even and my other one is in profit now, okay? But more importantly, I want to see what's going to happen at this VWAP. Okay, gold, yeah, gold is breaking out, but as well too, guys, if you got to be patient, you got to wait for that 4-minute candle to close to confirm that that volume is closing above there. Okay, so we got a nice push on US 30, but again, can it close above that previous high? Look at where it just came up to. Tweezer top high, the VWAP. Can the buyers bring it right up into that block? And let's see if we can get that move up to there. Excuse me. Okay, guys, I'm closing the one in profit down here. This one I'm closing in profit. That's 50 pips, okay? Closing that one in profit, okay? Yeah, I was in drawdown, guys, but I'm speculating too what the market is doing. I was going in with the absorption, and this one is basically at a break even. That one I'll run a little bit more. I know that there's probably going to be a pullback on that one, but this one was a small, my first trade, it was smaller, so I'm letting that one go because I really want to add a position, guys. Like I'm being serious. I really want to add a position, but I want to get the proper, maybe a pullback and maybe a closure, and then when it pushes, then I'm going to go in with a little bit larger sizing. But first one down here, that one is out. Still got that one, that's live. Basically break even right now. So you can recover your losses, guys, if you trade a little smaller, but I'm looking for the big move today. I'm not looking just to scalp just for a couple minutes. I'm looking what they're doing. Okay, so it came down, got some good support there, coming back up. Can they close it above there? I know that there might be one more leg pullback coming back down, but I want to see if it will build a higher low, and then it breaks. Then maybe we'll recover back up to here. And if they pick up, look at CVD is positive 1200. If it continues to build, today might flip and down might be a bullish day. So that's what I'm looking at. This is how I kind of trade Wall Street. I kind of just like how market makers do it too. They were absorbing. Okay, why can't you and I absorb? We don't got to go in with huge standard lot sizing. We can absorb with micros. We can absorb with minis to get a good understanding of how the market's moving. And now it's driving. There we go. So we're above the VWAP and there we're popping. Okay, so I'm going to get some pips on that one too. Okay, but let's watch the next leg down. The next leg down is going to be interesting. NASDAQ, a little bit choppy. Gold, okay, no volume has closed above on gold. No volume closed above, correct? So that was an impulse break. It did make a high. That's nice, but no volume closed above. Okay, we're really, really pushing. I want to see in the next minute, can Dow close above this red box? Okay, can the buyers close it above there? Lots of demand. Look at 1200 CVD. We accumulated the entire bottom, but there's going to be a pullback. There's going to be a pullback. Where can we pull back? Where can we hold? Can we hold 50% of this bullish body right at that purple line? Okay, and let's see if we can get our next leg up. There's going to be a pullback. Look at NASDAQ how it's dropping. Gold is dropping, so Dow will drop too. Again, then we got to go through the building again, the building phase. Okay, this is one leg down, one retracement coming back up, or possibly going to come back down, but we want to see, can we hold 50% of the volume, or is it going to be an actual double bottom down in here? Okay, so 15 seconds to go into the close. NASDAQ is coming right back to retest where it started. This whole move. Guys, markets are choppy this morning. Wall Street's very, very choppy this morning. Okay, so we closed below the red box. We opened ignited. The size of the wick, can we fill the wick? Probably we're below the red box. It's going to get rejected, but we're still ignited. If it can pop, we fill, and it maybe come up to this next red line. But we have work to do. But there's a lot of cumulative volume delta on our side, like for buyers, 1350. So there's a lot of buying accumulated from the bottom. Okay, that's where I kind of got in down there, 2 buys. But yeah, gold is still in the box. Keep your eyes on it. It hasn't broke out of the box yet. Okay, no volume closed above yet. It's still building. Look at your lower wicks. Okay, just careful on gold. Let's see if we can punch right out of here and hit this previous 34,620 where that liquidity is up there. Maybe grab some additional pips and then close out this trade. Okay, guys, these are big moves. Okay, remember down there was 50, that's 80 pips down there. Okay, so you can go smaller sizing and then the pips add up. You see, I'm not taking 10, 15, 20 pips out. I can allow trades to breathe too, but I've gone down in sizing. Okay, point 1, you make 50 bucks, 80 bucks. Normally when I'm scalping small, I use a standard, but I'm looking for 10, 20 pips to make the same amount. So just trying to teach you guys different options. You don't have to always just, you can open up a stop loss a little bit and breathe a little bit and add a position. Two trades are in profit. Yes, they were originally in drawdown. That's trading, guys. You know, the woulda, shoulda, couldas, I don't look at that. I was looking at the book. I was looking at this. Okay, and there we go. We're pushing. Okay. I'm going to secure some profit, guys. I'm going to secure. Okay, and there's the nice little pump because we might get maybe a leg coming down, but I'm going to secure. You want the pop to it? Yeah, but we're fighting a big bearish candle. Like that's where the market opened up, but came down to grab all that liquidity. So there's our resistance. It's right there at that daily area. So guys, I'm going to close out this trade as well. So closing them both out. Okay. Okay, because it could come back down, Okay, so and NASDAQ could be building maybe a double bottom down in here. So here was the first bottom, came up. Okay, we see where all of our resistance is now on NASDAQ, coming back down. Is it going to build another leg to come back up? Gold has not closed above this area yet. Okay, so be patient with gold. Gold is going nowhere. It's still consolidating right here. Yummy. Oh my God, 8.7% today. One of your best. Wow. Yummy, that's huge. A 9% day. Okay, no buys on gold, guys. Remember what I said. Don't fall for these fake outs. Okay? Wait for volume to close. You have to teach yourself that patience. Okay? Now the markets are pushing down. Okay, so in a move like that, okay, from bottom wick to where they grab that liquidity to the high wick right there, that's 125 pips. Okay, so you're gonna have to expect a retracement. That's why if you're up 150 pips, 100 pips, 125, you got to secure a little bit of profit, guys. You have to. Okay, just my humble opinion. Okay, because what if there's a retracement? You're going to give back a lot of your profit. Yes, it could just come back and continue to build, but you got to get in the habit of at least securing a little bit, okay? Same with NASDAQ. It came up, it came up, it came up. If you don't do anything up there because you want more and you want more and you want more, then all of a sudden it comes down and you're left with nothing, okay? That's trading, guys. We've all been through it. Everyone here, okay? I don't have to. I was in drawdown right there. And as soon as I start to get them back into profit, then I started to secure my profits. Now I'm going to reanalyze the market. I'm going to go for breakfast, have a coffee, come back, see how the markets are moving. I see now that there's a big range on the Dow. Like I'm looking at the Dow. My eyes are on the Dow. So I see coming down, first bottom, coming right back up. Maybe next leg could be coming back down to here. Test 50%. Hopefully not. Maybe it consolidates now in this green box inside here sideways and we continue to break out above there. It might not. Maybe we move bearish. But if it moves bearish down here, could be looking for selling opportunities. Okay, that's trading, guys. Get in, get out, reanalyze, drink some coffee, get in the markets, get out again, reanalyze. It's times where we just, for me personally, if I just buy and I hold and I just hold it forever, it's not my style of trading. I like to be in, out of the market, okay, whether I make money or I get stopped out, but then I like to reanalyze the market again with a clear head. So I don't want to have just a bias that I'm bullish all day and then all of a sudden the market it keeps dropping. Okay, so then I reanalyze the market and then I go with the bias of the market. Because if I'm bullish and it's retracing up to resistance and they're like counter trading and then I keep dropping it and I still have that bullish bias and then I buy again and it's another counter and then I'm buying into supply again and they keep dropping it, that might destroy me for that day because I'm holding trades. I'm holding it with the wrong bias and I keep adding on to that. We've all done that. Everybody here. That's how we've probably blown up all accounts, is because we don't know how to close out trades and we just keep adding onto our bias that's not correct. So this is, guys, me just personally. I'm just telling you. I don't even know why I'm telling you guys this. But when I get in or out of a trade, whether I make money or lose money, whether I get stopped out, okay, I'm telling you, I'm human. I lose money just like you guys, or I get stopped out at break even, or I make money, okay? That's what trading is. But when I'm out of the trade, I do it for a particular reason. I don't just do it to get money out of the markets. I do it to clear my head and to look at, okay, I was bullish when Wall Street market opened. Yeah, I was. You guys know I took 2 buys. But then it came right back up. Now that I'm out of the trade, do I want to continue to be bullish all day? I'm starting to look at, now this big red candle came down. Again, they're coming down with a bearish engulfing candle. Maybe today might be, who knows, it might turn into a selling day. But if I just keep my bullish bias, it might get me in trouble for the rest of the day. So that's why now I like to get out of the trades, have a coffee, come back and see what's building. And then see what's building. Is it building its neckline right here now? Okay, so like for example, how many of you guys do that? Sorry, I talk a lot, guys. But how many of you guys do that? Like when you're out of the markets, you guys reanalyze. You might have to shift your bias. Like some of you guys might be you're selling today. Maybe selling is your ultimate bias today, but you might have to understand that your bias might be wrong too today. Because look at, we have now cumulative volume delta 1600 positive. These could be shorts, like sellers selling into huge buyers, and this could be a huge institutional buyer today that keeps accumulating because they might redistribute this bullish volume later today, and you might be thinking it's a sell day, so you're selling into a big buyer. It just helps me with trading, guys. Hopefully it can maybe help you. When I'm out of a trade, I reanalyze, and then I look at the markets with an open bias again. So I can be a buyer, I can be a seller. Normally that's what I do as a scalper. I'm buying, I'm selling, I'm buying, I'm selling. But if you're an intraday trader, this is more intraday trading. Start to understand what the overall bigger move is and try and trade with it. But if it goes against you, you might have to change your bias. You can't be stubborn. Okay, and gold, guys, also watch gold. Will it close above this? I'm in 1918. On this chart, on Oanda, 1918. Can the buyers close it above there? If we get closure above 1918 and a nice retest, we could be pushing gold to 1920, 1923 today. Okay, but if we cannot hold, we've got rejection, rejection, rejection. If gold comes back down and we close below this white line, like 1914 down here, then gold could be technically bearish today. We could continue to drop down to maybe 1912, 1910 for short term. Yeah, Vito, I agree with you. If you have three losses in a day, you're out. It's kind of like a baseball game, okay? You know when you play baseball, 3 strikes and you're out. If you take 1 strike in a baseball game, okay, you got to be cautious now. You got to look for the right. You got to look for the right pitch. You got to look for the right trade. If we take 1 loss, okay. If we take 2 losses in the day, now we're 1 strike. Well, we're 1 more strike to be strike out a baseball game, and basically trading 2. So when you're on 2 strikes, you're on thin ice. And then if you take some traders stop at 2 strikes, and then before they take their next trade, they reanalyze the market. Maybe they have the wrong bias. That's exactly what I was talking about. Maybe you took your 2 strikes because you think the market is bullish when in fact it's bearish. So maybe you got to step away, figure out your next move, figure out your next strike, and then what I do is kind of with strikes, if I get a good trade back, I look at that as a win. So then it takes away my previous strike. Then I can continue to trade. My next trade is looking to break even, and then if I do that, then I'm back to where I had 2 strikes against me. Now I've got 2 good trades, and now I'm back to 0. So now I reanalyze the market. I'm at break even. I can stop trading for the day, depending if it was a stressful day or not, or I can go back and maybe now I'm understanding how the market is moving, and then I take another trade and I'm in profit and I can be done for the day. But 3 strikes, guys, if you take 3 trades and your analysis is not there, you need to do something right then and there. You like to stop trading. Yes, that's an option. Stop trading for the day, or maybe just stop trading, but review. What are you doing? What are you doing? Why are you taking 1 strike, 2 strike, 3 strikes? Why have you taken 3 losses, consecutive losses? You got to figure that out. You got to learn from it and move forward. But guys, if we have a bad day, I have bad days in the markets. We all do. I'm disciplined enough to now walk away. I wasn't able to do this years ago. Okay, when I was starting off as trading, I didn't do this. Okay, that was why I made a lot of losses, and I don't want you guys to do that. That's why this is what we preach here at SST. Don't do what we did in the past, because it's not going to get you nowhere. You're going to lose money. I lost a lot of money doing those stupid things. Just guys, be disciplined when you're trading. However you got to look at it. If you look at it like a baseball game, if you take 2, 3 strikes, that's it. The baseball game is over. Tomorrow there's another baseball game. You can come back and maybe you'll get some wins the next day. Okay, just like baseball teams. Watch gold, guys. Okay, it's 10 a.m. We could get market shift volatility, momentum switching. Okay, it's pushing back up. It could now with momentum fill these wicks, but again, it could just come up and go right back down. It did it multiple times. So again, if you're trading gold, guys, watch for closure above 1918. Maybe get a proper retest, maybe an ignited bar. Might be opportunity to look at gold for buys. We're still building inside here for US 30. It's building its neckline. We came down Wall Street, came back up, coming back down. My barcode might come back down for a double bottom right here, or we're going to punch out and test this previous high. NASDAQ right now is selling off. Okay, guys? But that's it for me, guys. I got to go grab a coffee. We will see you guys on Zoom. Remember, our webinar is 1 hour early, 5 p.m. Eastern today. And everyone on YouTube, thank you guys. We had over 400 viewers. Appreciate all of you guys. We are not just a trading channel here. We're about education. We're big on education. So yes, we do have fun trading live with you guys, but it's all about education, guys. Make sure you guys are learning as much as you guys can. I'd like to share a quick little video with you guys. If you guys got 2 minutes, just share a quick little video right here. I think it's two or 3 minutes. If you guys can give me just 2 seconds of your time, just want to share a video right here. We're introducing this SST kill shot. Some of you guys might really enjoy this. I'm just going to play it for you guys. It's on our YouTube channel.
This is Semrush, the digital marketing platform that helps your business grow on all channels.
Can you guys hear?
And it's free for 7 days. Say goodbye to multiple marketing tools and a mic.
Okay, guys, this is an EA that SST is developing. It's still developing, guys. So I'll let you guys probably know more about this. guys. Okay, so that's there's going to be more information, guys. You can get all the information off of if you click the description on it. And but it is an EA we've been creating for over a year. You know, for SST, it's you can try it free on demo. Okay, so that's what I suggest. You guys try it out. It's with proper risk management. You set your risk. If you want to risk like 0.5% for the day, it will do your proper risk. It's not going to trade 24 hours for you. It's specifically designed to find the fair value gaps at certain time in the markets, like London, from a certain hour time, and also leading into Wall Street. That's what it's designed to do, guys. If you've never used an EA, there is a little bit of education that you need to understand how these things work. Any questions, guys, that you have, or emails, on the MQL5 page, there's we have a dedicated team to answer all of your questions. You can download it on demo to try it out, guys. That's what I suggest, and just see how it is. But yeah, it's got some good R&R returns. Obviously, it's going to take some losses as well, just like any one of us. Gold, guys, breaking it. Okay, gold. Sorry, guys. But gold, there's our closure above with volume. There's the retest, and there's our retest candle. So if you patiently waited through all this garbage on gold, this is what we were looking for. I told you the entire call. Let's watch for, excuse me, 1918 volume to close above. We got it. And there's a retest. It wasn't a fake out like here. Here was a candle that closed above, but it was an ignited red candle that came down. Here we actually had the closure, open, retest, and go back up. We have our all three sniper entries. Either you buy the wick, you buy the break of the body, or you buy the pop of the wick. Anywhere. I normally buy right here. If I get the retest, I buy the break of the body. So right here I would have been in, stop loss maybe below the yellow line, and run it all the way up to there. As a scalper, you know, just measuring that move with, if you bought right here, coming all the way up, that's a almost 35-40 pip move. Okay, but this could continue to build. It came up, obviously, hit some offers, and coming right back down. So now in 17 seconds we judge where it will close. Look at your previous highs. Will it close above the previous high structure? Will it start to build off of this momentum and continue to come up? But that's sometimes, I know it's patient and discipline, trading all this garbage, but sometimes that's what traders are waiting for. You know, that's what disciplined traders are waiting for, is for that specific move. But you got to be disciplined enough to wait for volume. US 30 is also coming right back up too. Let's see if US 30 can close above this area, retest this, and push. NASDAQ came down and coming right back up. So you see, guys, now look at the cumulative volume delta on Dow, 2200 now positive. So if you're selling into big buyers, and this could be like a nice big double bottom, creating a nice big bullish move today. So but yeah, guys, so any questions, shoot us an email. Everything should be, we'll get more and more and more information on the EA. We just kind of launched it the other day, so it's just starting out, guys. Be patient, discipline with that as well too, guys. We want to give you guys a good product, not just anything that's out there, you know. So but if you're familiar with EAs, like I said, maybe you guys know a lot more on EAs trading than me. But for those traders that are interested in this, it is out there. You guys can use it on demo for free to test it out with the securities and certain time of days, and get more familiar with it. Okay, guys. So thanks, guys. I appreciate all of you guys, everybody on YouTube. Appreciate you guys sticking around. Everyone on Zoom, thank you guys so much. Enjoy your day today. PK's got a day off today. I'll be back with our webinar at 5 p.m. And tomorrow, again, guys, we'll see you guys tomorrow for live New York, and then PK's post tomorrow. So thank you, guys. Enjoy the rest of your day, guys. It looks like the markets are starting to move a little bit. If you've looking to continue to trade, have fun today. Trade with proper risk management, as always, guys. If you've hit daily goals, exceeded daily goals, go and enjoy your day today. Enjoy your day, okay? And we'll see you guys later on. Have a good day, everyone. God bless. Thank you guys for joining. Thank you for all the likes, subscribes on YouTube. Appreciate all of you guys. Have a good day, everyone. Thank you, guys.
Hey guys, good morning. Welcome to the live session of Stocksnipertrading. My name is Dave, guys. My partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.
Trading with a perfect broker is the key, which takes you one step ahead. At AAAFx, we have you covered. The future of Forex is zero commission. Here at AAAFx, we offer ultra low commission, which starts at 99 cents per lot. Our account's spreads start from 0.0 pips. With account leverage up to 500x, and can have a minimum deposit of $100, with an additional 100% deposit bonus, regulated by HMC Greece, compliant with ESMA, EU, regulated with FSCA, South Africa. Nothing to lose, but something to gain. Trade with the world's most liquid market provider, AFX, recommended by Stocksnipertrading. To get started, use the affiliate link below.
As a trader, we all look for tight or low spreads, which helps us to get in and out of the market. Using the right broker can help us try different strategies. With multiple options of brokers on the web, here at Stocksnipertrading, we have a recommended broker, that is, HankoTrade. With spreads as low as 0 pips and leverage up to 500x, HankoTrade is just one click away. With multiple account types to choose from, you also have a minimum deposit of $10. Using HankoTrade's affiliate program, refer a friend and earn up to a 40% commission on trading volume. Built by traders, for traders. HankoTrade.